The Fed is going to ease or not. We know that the swaps markets are pricing in about a 50% chance of a 25 basis point hike at the next Fed meeting. Here are your top stories then. European indices are set to follow global equities high. That's amid easing concerns about that bank failure contagion. Meanwhile, Bank of England Governor Andrew Bailey boosts market sentiment, hinting rate hikes may be coming to an end. The ECB's Isabel Schnabel says the UK provides a better steer on rates than the Fed. Intriguing. A US regulator accuses Binance of sham compliance measures in a federal lawsuit that claims its CEO routinely broke the rules. Bitcoin slides. European markets opening then as we weigh up then the competing narratives around the next move from this Federal Reserve. Yes, the banking contagion concerns have eased, at least for now, and that saw, of course, the gains that we came through in Wall Street and on US stocks yesterday, if you put the NASDAQ to one side. Here in Europe then, solid gains of 0.9% across the Spanish IBEX, gaining 81 points. In the UK, the FTSE 100 up 0.6%, despite a reminder that inflation remains a very key concern. Shop prices, grocery prices, again, reaching new records. Over in France, the CAC 40 up 0.9%. Protests expected again. The pressure remains on President Macron over his changes on pension reform. Let's switch it over, see how things are playing out cross-asset then. The move, again at the front end, was pronounced yesterday. Yields up about 23 basis points on the 2-year. Back below 4% now at 398. Future stateside looking to gains of 0.4%. Bitcoin in focus for us, given the legal challenges facing potentially Binance. So you're currently seeing gains of 0.2% after the losses of about 4% yesterday for the largest crypto. But the context is, year to date, you have seen gains of around 60% for Bitcoin. So whether or not can weather the latest storm, of course, is a focus for the crypto space. Let's check into some of the individual sectors then. Of course, financial services, banking remains in focus for us. And finance and the financial sector in Asia has performed relatively well so far today. We'll see if that follow-through continues. There is the picture across European banks then, gaining 1.8%. So the relief continues around expectations, at least for some, that maybe, just maybe, we can put this banking contagion in the rearview mirror. There's financial services gaining a little over 1%. Energy up 2%. You have seen a bit of a rebound. You did yesterday, at least, between 4-5% for oil on some supply constraints coming through from Turkey, and technology gaining 0.4%. And the moves in tech, you've seen about 15% year-to-date gains for the NASDAQ. Expectations that if you see rate cuts towards the end of this year, and don't forget the markets, at least some participants expecting rates to come back down to around 4.2% by the end of this year, that will be supportive for the tech sector. Let's delve into the finer details on these markets then, and bring in Christine Aquino from our Bloomberg's Markets Live team and our markets reporter, of course, Valerie Teitel. Christine, let's start with the equity space. We've had these calls around just how resilient stocks are in the face of extended or at least stretched valuations still. That is a call from Mike Wilson over at Morgan Stanley, saying that you still see forecasts that are overly optimistic. There's going to have to be a downgrade before he and his team get more optimistic, at least at the index level. And then JP Morgan's Kalanovic saying, do you know what? The first quarter is probably as good as it gets for these equity markets. What do you make of the recent comments on where stocks go from here in light of the Fed and the banking crisis?
Well, Tom, I think from those comments alone, you can see there's been a lot of confusion over where stocks are going to go next. And yeah, I think Kolonovich is absolutely right. The first quarter was the easy part of the year, I think, for equities. I mean, at the start of the year, we were kind of subscribing to this narrative of a no landing scenario, a Goldilocks scenario, if you will, where inflation remains under control and then growth is not going to be slowing down enough that it really hurts equities. Very different picture now, right? That we're seeing here. And yeah, I think valuations really have to make a lot of adjustments, especially because last earnings season, we also saw a lot of optimism from companies themselves. They're declaring pricing power. They're declaring optimism over the reopening in China. Again, very different story now because the focus is very much on financial stability and recession risks coming back to the fore. So I think a lot of adjustment has to happen in that valuation space. Very difficult few months ahead, I would say, for equities.
So Valerie, on this debate, and we've seen it very clearly articulated by the likes of Jeffrey Gundlach on one side saying, do you know what, we are facing recession, it's going to happen in weeks or months, there are going to be rate cuts as a result. And then BlackRock and Wei Li of BlackRock coming out saying, no, they're not going to resort the Fed to the old playbook. That debate is intense. How are the markets pricing this?
Look, I have a lot of sympathy for what Gundlach said yesterday. Many people who are pessimists about this regional banking crisis are claiming that the situation doesn't end until the Fed cuts rates. The regional bank business model is coming under a lot of stress for that reason. They can't compete with money markets who are offering 4 to 5% yield. And the front end of the yield curve is very inverted. And the regional bank's business model is not very profitable if that stays. So until the Fed cuts rates, this situation is going to continue. Tightening of credit standards, which Powell and many of the Fed members warned us over the weekend that is coming and is going to hit economic growth. That's going to continue until the Fed cuts, and I think that's the prism through which Gundlach is seeing this situation.
We have Fed speakers later this week, and then the PCE index as well towards the end of the week. Look and pair that into how markets then could be positioning towards the end of this week and how those adjustments may come through. It's remarkable to think that some of the swaps markets are pricing 4.2% now by the end of the year.
Yeah, so I know we get PCE on Friday, but because we've gotten PPI and CPI, we have a good estimation of where it's going to come. I think a lot of the market attention is going to be elsewhere. We're going to be laser focused on things like lending surveys. What is the reaction function of these regional banks? Will they actually pull back on tightening, and to what extent? To that manner, we get the Senior Loan Officer Opinion Survey. It's done quarterly. We're going to get that survey before the Fed meets again. I think that is the risk that's going to cause the Fed to pause if those tightening of conditions come. But again, the Fed has told us many times they're going to attempt to keep rates high, and they're going to let the balance sheet expand as needed. And that is a very dire situation for the dollar, because if we get to a point in the later half of the year where the Fed is forced to cut rates to help the regional banking crisis, shall I say, the dollar is going to sink, gold is going to rise, real yields will go back into negative territory. And entrenched inflation, it could be here to stay, especially as the fiscal lever is back to stimulus already.
Christine, are we looking now at moving from the banking crisis to concerns about a credit crunch? There's a lot of conversation about real estate being the next pressure point, private equity being the next potential shoe to drop. Is the credit crunch an issue that is going to come to the fore now?
Absolutely, Tom. I mean, there's already laser focus on that situation now. And I have to say, I've been watching this with great interest, just trying to look for the various canaries that could potentially sing. And there's a lot of them. As you mentioned, the property market, and then also signs of kind of like smaller companies just seeing that those credit lines, those funding lines really drying up. And, this is something that we were also seeing towards the beginning of 2008, right, in the prelude to that crisis. It's very different, of course, because there's been a lot of reform in the banking sector since then. I would agree with that. But I think you're seeing a lot of the similar signs of funding lines, credit lines drying out for smaller companies. And the reality is there are just companies that are not strong enough to be able to withstand this kind of pressure. So the question is it going to blow up in a similar way to 2008 versus now? I mean, that remains the big question in everyone's mind.
And on the other central banks then, the other major central banks, the Bank of England, Andrew Bailey suggesting that you're not going to get rates back to kind of pre-pandemic levels necessarily. And then Isabel Schnabel of the ECB pushing at the last meeting to have some language included to flag the potential for further hikes. Is the ECB the last hawk standing amongst the major central banks, Valerie?
Well, they are way more behind the curve than the other global central banks that you mentioned. But you know, you can see a lot of the argument why banks want to continue, why these central banks want to continue hiking. Maybe they know they might have to cut drastically after this, and they want to keep that lower bound above the 0 mark that they hit before last time when they cut. You know, maybe that's why the Fed wants to eke out another hike, just so when they do cut, they're not going all the way back to 0, and it gives them a little bit more room.
Okay, Valerie Teitel, thank you very much indeed, of course, of our markets team, and Christine Aquino walking through the equity impact as we assess the next steps for these central banks. We have some lines breaking now, just building on the picture when it comes to the inflationary front and the cost pressures across the grocery space here in the UK. This is from Kantar. So just recapping very briefly, Tesco 12-week sales rising 6.9%, Ocado up 7.3%, Sainsbury's 12-week sales gaining 6.9%, but it's the cheaper grocers that are really benefiting for this cost of living crisis here in the UK. Aldi, 12-week sales gaining 25.4%. Lidl up 25.8%. So there is the diversion, or at least the diversification between the larger grocers, the slightly pricier ones, and the cheaper cost-cutting grocers that are benefiting in the face of these high prices. Right, let's get back to what is happening across these markets. We're going to be hearing, of course, and getting some analysis on the comments coming through from Double Line Capital's Jeffrey Gunlack, who, of course, as we mentioned, has warned of a US recession, suggesting it's going to start in a few months and that the Fed will need to respond, quote, very dramatically. We've got an analysis on that story coming up, the pushback as well from the likes of BlackRock. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
News breaks. No one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of 3 very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021, and now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
Welcome back to the Open. We are 12, almost 13 minutes into the European trading day. You're seeing gains across the European benchmark of 0.6%. Futures up as well in the US. S&P E-minis gaining between 2 0.3%. Across your sectors, we've had a decent session again across financial services and Asia, and that handoff continues into the European space. Then you can see the banks gaining once again. So the easing relief around these contagion risks continuing again into the session today for the second straight day this Tuesday, gaining 1.4% on Deutsche Bank, of course, after the rout we saw on Friday. Commerzbank healthily gaining 2.5%. UBS also up, as you can see, and Barclays gaining a little over 2%. We'll switch it over to see how the energy majors are playing out, because across your sectors, banking leads the drive so far in the session, top of the list across your sectors, gaining 1.8%. But it's energy and basic resources that come a second close second and third, and you're seeing rallies there for the likes of BP up more than 2%. Shell, Total Energy and ENI all gaining between 1 and 2%. You did see a tip up in oil prices. WTI gained about 5% yesterday on some supply constraints coming through from northern Iraq via Turkey. And we'll see to what extent that continues. Currently, you're looking at Brent just down 0.3%, WTI trading at $72 a barrel. Let's get back to the debate around US recession risks. Jeffrey Gundlach says the economic headwinds are building. The Double Line Capital founder told CNBC that he expects a recession in the US in the coming months, and that all we are waiting for is the unemployment rate to go higher. Let's bring in now Maria Monici, who's multi-asset fund manager at M&G Investments. Maria, good morning. Thank you for coming to the studio. Pushing back on that is BlackRock saying, do you know what? The Fed are not going to resort to the playbook of the past. They are going to be laser focused still on inflation. Rates will remain high for longer. That debate is acute. Where do you stand?
Well, I think it has been very interesting to observe the events of the last few weeks, because with the banking crisis, one would have probably expected that investors were more ready to take on the narrative around contagion and recession. But actually, the broad indices have remained broadly quite resilient. And so it looks like at the moment this crisis is very much focused on the banking sector rather than the more broad risk.
What explains that resilience?
Well, it's very interesting because only a few months back, we were looking at, end of 2022 when investors were much more ready to talk about recession. But our monitoring of narratives in the last few months has shown that actually there has not been a pickup on the recession worries in the last few weeks. So it's still very much seen as a relative specific risk to the banking sector. I think what has supported investors in this phase is more positive surprises on the macro data. So we have seen, for example, soft indicators continuing to surprise to the upside, specifically on the services sector and also on the composites, while manufacturing remains a little bit more behind. But that has given investors a bit more support in staying away from the risks of impending recession.
But that stronger services data, for example, keeps inflation at these relatively elevated levels, and inflation remains a challenge. So do you align with the BlackRock view that, the Fed is going to have to hold, they're not going to be cutting towards the end of this year because inflation remains too high, they need to get it back down. If they're not going to get to 2%, they at least need to see it coming materially lower. Is that a view you align with, or do you see cuts coming?
Well, I think we had a very interesting messaging from central banks in the last few weeks. So with the European Central Bank hiking 50 bips, the Fed 25 bips. So they're really sticking to the agenda of trying to push down inflation. However, what is happening in the banking sector is really going to help them because, with what we've seen in terms of banking re-looking at the lending criteria and how, a bit more restricted they're going to go into that in the coming months, this is actually helping on, potentially reducing some of the heat in the economy and bringing down demand and growth. So they're having quite a boost, I think, from what is happening in the banking sector in terms of trying to rein in inflation in the coming months.
We touched on the relative sanguine nature, or at least the concerns ebbing around the banking crisis just in the last few days. Do you think that sustains itself? Can we put the banking crisis in the rearview mirror?
Well, I think, we are 12 months into a hiking cycle that has been quite extreme. And we still haven't seen some of the lagged effect that this is going to bring. I think what we've seen in the recent week in the banking sector is one example of this. So some of the first cracks we're starting to see, and how regional banks in the US have been affected in the balance sheet is clearly a key example of how much interest rate can have an impact on different sectors and the real economy. And I think there is other elements linked to that. I mentioned the tightening in lending that we're probably going to see from here in the US, but also likely in Europe. And I think there is some areas that still warrant quite a lot of caution. For example, when we think about commercial real estate loans for those banks, I think there are areas where we really have to keep our eyes open as investors.
So beyond banking, the top concern for you would be real estate at this point?
I think definitely when we look at the US, the housing and household sector is one of the key areas that we need to keep a close eye. If you think about the household sector alone, I mean, obviously with the increase in prices, we have seen also an increase in consumer credit, which is now raising at about 8% per annum. But at the same time, you have, interest rates on credit cards, which is close to 20%, which is extremely elevated. And it's not surprising that you're starting to see some of the delinquency rates increasing, although from a very, very low level. So I think this area, housing and households in the US,
banking stocks now looking heavily discounted. Any opportunities there? Is anything within banking looking attractive to you and the team at M&G?
Well, I think we have seen valuations being, on the positive side for a while on the banking sector. But there are some distinctions to be made in terms of geography and size. I think when we look at the European large banks, there is still some value there. We see some capital and balance sheet characteristics that are still pretty healthy. Obviously, they have in the balance sheet already taken the hit from what has been the increase in interest rates that we've seen in Europe. There is also some potential benefit to be taken from slightly increase in interest rates in Europe, while it's less so the case in the US. So I think this part of the financial industry and banking sector in particular might still provide some opportunity.
Do you want to lean into the tech rally?
Well, I think tech is another very interesting area, because when we look at how tech behaved last year, it's been pretty brutal, as we all know. We've seen valuations coming down very significantly. Well, this year, there is a support in terms of where interest rates are now and the potential path that this can take going forward, which could be positive for tech. Also, many of the tech companies, they are cash flow positive, they have strong balance sheets, they have cut costs. And they're also relatively defensive, depending on what type of macroeconomic environment we're going into in the coming months. So there is potential still opportunity to invest in this area of the market.
Okay, the defensive nature now of the technology sector. Thank you very much indeed, Maria. Really excellent insights this Tuesday morning. Maria Monici, who is multi-asset fund manager at M&G Investments. Thank you very much for joining us on set. Up next, the US sues Binance and its CEO over compliance measures. Another shock across the crypto space. We're going to get the latest on that story next. This is Bloomberg.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media. And it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
Okay. All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City.
In London, in Sydney,
From Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Welcome back to the Open. 23 minutes into the European trading day. Gains of 0.5% here in Europe. Futures pointing up on the S&P E-minis by about 0.1%. Banks and basic resources and energy top of the list across your sectors. Now, US regulators have accused Binance and its CEO of routinely breaking derivatives rules, an allegation which the chief executive has called, quote, unexpected and disappointing. Let's bring in Bloomberg's Emily Nicole then for the latest on this. Emily, how is the crypto market reacting to the news today?
As soon as the lawsuit landed yesterday, we did see a bit of a drop-off in prices. You know, Bitcoin went down about 4%, same for Ethereum. But since then, actually, it's rather stabilized. We haven't really seen any major uptick in withdrawals coming from Binance. There's been, you know, like a slight drop-off and a little bit of a push towards Coinbase and OKX as other exchanges, maybe where some customers are moving their money. But it's nowhere near the levels of withdrawals that we saw when FTX collapsed last year or any of the other issues that Binance faced at that time.
Is that because there's an expectation that rates are going lower and that's going to be supportive for crypto, or is this an expectation that Binance is resilient?
What we're hearing is that it's the latter. It's that this is obviously a prime time to be trading crypto. It is doing quite well given the current rate environment, and that this is only a lawsuit from the CFTC. It's not criminal charges. There's no extradition here that could happen for Zhao, who is the CEO named on the lawsuit. And so at the minute, what we're hearing from market makers is there is no reason to panic, but that doesn't mean they're not being cautious. That doesn't mean they're not priming themselves for anything that could come down the pipeline after this suit.
Really, really interesting in terms of how market participants are assessing this move then, Emily. What is the broader implication in your view for the wider sector of this? Does it suggest that regulators are arming themselves with more action more broadly across this space?
For sure. We've seen a major uptick in enforcement from the US in particular over the last 2 months alone. You know, we had Wells notices go to Coinbase last week. We've had actions against Paxos, which used to offer a branded stablecoin with Binance that specifically mentioned it was because of the partnership with Binance that had to end. There are various things going on in the US at the minute, and it does seem that regulation by enforcement, as the crypto industry likes to call it, is the current modus operandi for the US. We don't yet have any kind of bills in place for the US in terms of what lawmakers are considering to regulate the sector. And so this is really the only weapon they have in order to get some kind of arm or reach around the crypto industry.
Okay, Bloomberg's Emily Nicole, really great explanation as to the recent and most latest events unfolding across the crypto space, with the focus, of course, on Binance. Binance.com saying, and I'm quoting now from CZ, the CEO and founder, Zhao Changpeng, saying, Binance.com does not trade for profit or manipulate the market under any circumstances. That coming from the founder and CEO of Binance. Coming up, in France, unions begin a 10th day of strikes, a 10th day over pension reforms. We're going to be bringing you the latest on the ground from Paris. That is next. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view. And I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into your European trading day, and here are the top stories. European stock markets follow global equities higher amid easing concerns around bank failure contagion. Bank of England Governor Andrew Bailey boosts market sentiment, hinting rate hikes may be coming to an end and will probably remain below the highs seen since the financial crisis. Plus, a US regulator accuses Binance of sham compliance measures in a federal lawsuit that claims its CEO routinely broke the rules. Bitcoin is holding up, in fact. Relative resilience across Bitcoin. Let's check in on these markets then. Across the benchmark, you're seeing gains of 0.5%. Yes, those easing concerns about the banking crisis continue. The debate remains very heated, though, of course, what the implications are in terms of the tightening that's come through from the banking crisis, what that means for the Federal Reserve. Swap markets still pricing in a 50% chance of a 25 basis point hike from the Fed at their next meeting. But markets equally also pricing in rates moving down to 4.2% by the end of this year, and the debate being articulated by the likes of Jeffrey Gundlach on one side and BlackRock on the other, saying, do you know what, the Fed's going to have to hold for higher. The DAX currently getting 0.5%. The FTSE 100 here in the UK, 32 points, getting 0.4%. We had that comment, that suggestion from the Bank of England, but also a reminder of the soaring, eye-watering prices amongst the grocers here. Food prices, again, hitting record highs. Let's take a look as well at how some of the individual sectors are playing out. Energy topping the list, getting 1.3%. Basic resources also up 1.2%. Two sectors in the red on what is a day of relative risk on sentiment. Media currently lower, just by a smidge. Real estate also down 0.5%. Interesting to hear from M&G, our previous guest, saying that real estate, particularly in the US, is now looking vulnerable. Let's break it down and see how some of the oil and energy majors are performing in the session. 32 minutes into your trading day. Some pretty decent gains between 1.5%, 1.2% and around 1.8%. Oil rallied yesterday. WTI gained between 4 and 5%. There were some supply constraints coming through from Turkey, with oil coming via north in Iraq to Turkey, and that pushed up prices. Long term, though, what is the view on oil? It's looking a bit murkier. WTI and Brent, the last time I checked, gaining just marginally. BP currently up 1.5%. The likes of Shell, 1.2%. Almost a 2% gain there for Total Energy over in France. Talking of France, French unions strike nationwide again today over President Emmanuel Macron's plan to raise the minimum retirement age by 2 years to 64. That's as concerns mount over violence between protesters and riot police. For more, let's go to Bloomberg's Caroline Conat, who is on the ground for us in Paris. Caroline, what do you expect today then?
Tom, today is the 10th day of a general strike in France since the middle of January, and we expect another day of mass protests, not only in Paris but across the country, and unions are expecting to beat last week's number of 1.1 million protesters in the streets across the country. The problem you had last week is that you had a lot of violence on the sidelines. These so-called black blocs, far-left groups, actually disrupting the marches by the unions and clashing with the police. In fact, as you can see behind me, for example, this branch of BNP Paribas has already barricaded itself ahead of the protest taking place this afternoon in Paris, and the police chief of Paris has said that there will be at least 5,000 police officers and anti-riot squads in Paris, 13,000 across the country to try and contain the violence that we could see during the protest against this pension reform. So clearly the situation is not really calming down when it comes to protests. You still have disruption as well in the transport sector. In schools, you have about 30% of school teachers on strike today. Also disruptions when it comes to gas stations. Reminder of the disruptions, the fuel shortages we had last fall. About 15% of gas stations in France are currently missing one type of fuel. One improvement, however, on the garbage situation in Paris. I've seen a lot of garbage trucks actually making rounds this morning, and the garbage piles have actually started to recede in central Paris.
Okay, one sliver of good news then coming through when it comes to the situation on the ground in the French capital. What is the next step then for Macron, Caroline? Does he stick to his guns or does he fold?
At the moment, he is not expected to back down on this pension reform. He had lunch with his Prime Minister, Elisabeth Borne, yesterday, and the heads of his very fragile majority. And after that meeting, Elisabeth Borne promised to appease the situation with the unions. She said she's going to try and meet them over the next couple of weeks. But the situation has become very tricky because 2/3 of the French still support these protests. Even if you have some violence, 2/3 of the French are still opposed to this pension reform. And politically, in the long term, it is not great for Emmanuel Macron, because they had a very interesting poll over the weekend, actually, by IFOP, showing that if there was a dissolution of the National Assembly today, if new legislative elections were to be held, then the national rally of Marine Le Pen and the far left of Jean-Luc Mélenchon will actually get about 26% of the votes. Macron would only get about 22%, so he would become a minority if there was a dissolution of the National Assembly. And overall, Tom, you know, this has been very bad for the image of France abroad. And of course, the cancellation of King Charles' visit, a state visit in Paris this week, has been seen here as a humiliation.
Yeah, absolutely. And the polling, of course, around the extreme left, or at least the far left and the far right, is the salient point as well, longer term, for international investors looking at France, of course, as you highlight. Caroline Conart, thank you very much indeed on the ground for us in Paris. Let's get the Bloomberg Business Flash now with Sam Etienne. Sam.
Morning, Tom. Diageo has named a new CEO to take over when Ivan Menezes retires in July. Deborah Crew, currently Chief Operating Officer, led tobacco company Reynolds American before joining Diageo. She's previously worked at PepsiCo, Kraft Foods, Nestle, and Mars. She takes over as the world's biggest drinks company reports a slowdown in sales in North America, raising concerns that a key motor for earnings growth is slowing. And Walt Disney has begun the first round of what is expected to be 7,000 job cuts, a key part of a $5.5 billion savings drive announced in February. The first group of employees will be notified over the next few days, with a second round in April. CEO Bob Iger is facing the challenge of wringing profit from its streaming services, which lost more than $1 billion in the latest quarter. And the head of the US National Security Agency's cybersecurity arm says TikTok is China's Trojan horse and poses a long-term strategic cybersecurity concern. Rob Joyce says the US needs to monitor the video sharing app's parent company to avoid a security incident 5, 10, or 20 years down the line. TikTok says it poses no greater risk than other social media services. And that's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg. Tom.
Sam Etienne here in London. Thank you. Coming up, BOE Governor Andrew Bailey signals a slowdown. He says rates will probably remain below the highs seen before the financial crisis. We'll get more analysis on that next. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it is causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
Board meeting or something like that, does your assistant tell you that there's a call from the Secretary Treasury or Chairman of the Federal Reserve, where they put that right through, or do you say, I'll get back to them when I'm
My
right
chairman sitting in front of me here, you can attest that I will dump the board to pick up Janet Yellen or Jay Powell.
We have a strong macroprudential policy regime in this country. The bank's Financial Policy Committee is on the case in terms of securing financial stability. And this is important for monetary policy because it means the MPC can focus on its job of returning inflation to target.
The Bank of England governor there suggesting UK rates will not be lifted back to the highs seen before the financial crisis. Let's bring in now Bloomberg's Leanne Gerrans for more on this. Leanne, is this a hint then that the BOE may, just may, be near the end of its hiking cycle?
Tom, good morning to you. It's a hint, yes, indeed. That's exactly what it is. And yesterday we saw Bailey giving the speech at the London School of Economics. It seemed to be what we could almost describe as upbeat in many ways. So like you said in the intro there, he said, listen, this could be the end of the hiking cycle that has been the quickest in 3 decades. And he also said something that I thought was important to point out, that he reiterated that more tightening will be needed if inflation persists longer than has been expected. So even though we got this upbeat tone echoing what he said in last week's meeting with the BOE after they made that decision to hike by 1/4 point, he is still seeming somewhat positive going into the future.
And what did he have to say about the banking crisis?
Yeah, so he had to say a few things about the banking crisis. One thing he did talk about was social media's influence on the banking crisis, Tom, which I felt was quite interesting too. He said that the run on banks just seems so much quicker because of the digital age, because, you know, word spreads so quickly. So this is something banking regulators need to look at. But he also said that, you know, we're in a good situation here in the UK financially to go into any more shocks. You know, we can withstand those, and the economy is in a good position to do that. So it seemed to be a little bit positive. Also, we saw, you know, what happened with SVB. They made a decision very quickly before the markets opened on Monday for the UK arm of SVB to be bought out by HSBC. So it appears that he is saying, listen, things are resilient at the moment, and that is something that is positive going to the future. But we do have to remember about persistent inflation, something he did really highlight, Tom.
Okay, Bloomberg's Leanne Gerrans on those comments from BOE Governor Andrew Bailey. Thank you. Let's bring in at this point Kamakshya Trivedi, co-head of Global FX Interest Rates and Emerging Market Strategy Research at Goldman Sachs International. Kamakshya, thank you very much for coming in to the studio. So we're focused there on the UK, maybe some of the work done for that central bank by the banking crisis here in terms of tighter conditions. The same debate being had over in the US, of course, and the debate as to the next steps for the Federal Reserve. BlackRock saying they're going to have to remain high for longer. Listen to Jay Powell. Stick with this economy. Don't fight the Fed. Others saying you're going to have to see cuts. There's going to be a recession. Cuts are going to come through towards the end of this year. Where do you stand?
Look, I think that, you know, there's a lot of uncertainty, obviously, about how intense this banking crisis is going to be, what the breadth of it is going to be, what sort of damage you get. But one thing is clear. You're going to see, and Chair Powell said this as well, more credit tightening and less monetary policy tightening. I think that has, you know, perhaps similar impact on the economy, but it has very different implications for asset markets. If you take the dollar, for example, the imprint of the dollar, if you get less monetary tightening and more credit tightening, it's a dollar negative. And I think that, is an important shift that is happening in markets that markets are trying to digest.
So where are we in that shift? Bloomberg Dollar Index down about 9% since September. Further to run on that front then?
I think further to run, although when you look at the dollar index itself, given the large weights, for example, of the euro, it's not clear to me that the dollar negativity, the best place to express it is versus the euro. I think there are other cases, things like the Japanese yen, for example, which could run much further in a world where there is the skew of downside risks has shifted to rates that are low, although they've run a long way, but also equity markets where I think the risks are to the downside.
You touched on the yen. What is the next level for the yen? We're wearing up the potential for that yield curve control policy to be, if not scrapped altogether, then be adjusted in light of a weaker dollar as well. Further upside for the Japanese currency.
I think that's exactly right. I mean, one of the things that we have always argued in our research, that apart from the shifts in domestic policy in Japan, the yield curve control shift that you mentioned, what is really important for dollar yen is the real exchange rate and the real interest rate differential especially. And I think that is beginning to shift in favor of the yen. So the yen tends to do the best when both rates are coming down in the rest of the world and equities are going down. That didn't look like the environment a month ago, but the balance of risks has shifted in that direction pretty clearly after the banking stresses that we've seen. So I think the yen has more to go. We think, you know, levels like 125, 126, I think could be within reach when you see a kind of re-intensification of some of the stresses that we've seen.
125, 126 on yen. You touched on the euro. You don't think that's necessarily the best play on dollar weakness, but euro dollar currently around 108. Is 110 a reasonable level for the single currency?
I think it's a reasonable level as we go through the year, as the ECB sort of delivers some more hikes. I think in the near term, it looks to us like it has run too far. The market is pricing in quite an aggressive ECB path, not on its own merits, but especially when you compare it to the US, where you're pricing in, you know, some cuts within a few months. And I think that divergence now increasingly looks quite stretched to us. And so I think it's a reasonable level as you go up further out. In the near term, I wonder if that divergence actually closes a bit and you actually see some euro downside from these levels.
Okay, really interesting. There's a couple of lines crossing from the ECB. ECB's Enria saying he wants bank oversight to be more efficient, saying also that changes to supervision to reduce banks' burden. We'll keep across, of course, those lines coming through from ECB's Henriette. Talking of the banking crisis, there has, of course, been a reminder of the duration risks in the US in terms of the purchases and the money flows into those long-term securities. What is the duration risk in your EM world?
Look, I think one of the interesting things is that if you look at the shift in rates, that has happened in EM as well, right? You've seen interest rates go up quite significantly across most EM jurisdictions. But if you look at it on a volatility-adjusted basis, especially compared to the rates that have prevailed over the last 10 years, the shocks are not that big in emerging markets. I mean, yes, Brazilian rates, got up to high double digits, but they were up in double digits back in 2016. So you're not starting from a period where you had a very low level of rates for a long time and then a very rapid increase of the kind that you've seen in the US, or for that matter, in the euro area. And so I think that that kind of duration shock that you've seen in parts of the DM world, it's true in isolated places in EM, perhaps in places like Israel, parts of Central Eastern Europe, but by and large amongst the higher yielding EM currencies or EM countries, yes, a big move up in rates, but not a shock relative to what the kind of environment that has prevailed in EMs over the past decade.
Jeff Curry, another big name in the Goldman Sachs team, saying he's adjusted his forecast for oil to about $94 a barrel by the end of the year. And he's really, every time we speak to him, he's saying, look, China should not be underestimated in terms of the demand impulse coming through from the world's second largest economy. And it takes me on to your views on commodity FX and how they play out. Do you align with that? Is that house view, and what kind of support comes through for commodity FX towards end of the year?
I think that's a very important point about China. China is a little bit sort of cut apart from what is going on in the banking world, in banking issues in the US, in the euro area. And in fact, when you look at our growth estimates, we've upped them for China for the full year, even as we've been sort of cutting them in the US and the euro area. So I think that there is an opportunity or a window here for Chinese assets, where, some of that reopening optimism had been priced out in February. I think some of that can start to come back in. The underlying growth data is better. And they don't have the same trade-off that other policymakers have between growth on the one hand and inflation, financial stability on the other hand, at least not yet. And so I think for now, they're pretty solidly focused on delivering growth. They cut the RRR. I think that's going to be their focus. I think Chinese assets can trade better, outperform. And I think that will help a lot of the other emerging market commodity currencies as well.
Okay, really fascinating. Always excellent insights. Kamakshi Trivedi, thank you very much indeed for coming into the studio this Tuesday morning, co-head of Global FX Interest Rates and Emerging Market Strategy Research at Goldman Sachs International. Coming up, Walt Disney announces its first round of an expected 7,000 job cuts. We'll bring you the details. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
This is Bloomberg.
Welcome back to the Open. 53 minutes into the European trading day. Gains of 0.4% across the benchmark. In the US, S&P E-mini is pointing to very modest gains of 0.1%. Let's get the Bloomberg First Word News now with Sam Etienne. Sam.
Morning, Tom. Israel's president has called on Prime Minister Benjamin Netanyahu and opposition leaders to immediately start talks over controversial plans to weaken the judiciary. Thousands of protesters have been on the streets overnight, even after Netanyahu said he'll pause the policy. And police in the US say the suspect in a Nashville school shooting had drawn a detailed map of the building before killing 6 people, including 3 9-year-old children. Police shot dead the attacker, whom they've named as a 28-year-old former student. Following the tragedy, President Biden again called on Congress to ban assault weapons, saying gun violence is ripping at the soul of the nation. And the chairman of Barclays has described recent allegations against former CEO Jess Staley over his relationship with Jeffrey Epstein as, quote, serious and new. It's the lender's first update on the matter since Staley left the bank in November 2021. Staley quit as Barclays boss after UK regulators found he had underplayed his relationship with the convicted sex offender. Staley is challenging those findings. And that's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg. Tom.
OK, Sam, thank you. Here in London, of course. Now, Walt Disney has begun the first round of what is expected to be 7,000 job cuts. The move is a key part of a $5.5 billion savings drive it announced in February. The Wall Street Journal, meanwhile, reports that Disney has cut a division that was developing metaverse strategies. Joining us for more is Bloomberg's Alex Webb. Why is Disney making these cuts now then, Alex?
Well, the thing that we saw that happened during the lockdowns was that quite early on, there was an activist investor came in and said, you need to be more like Netflix, cut the dividend, invest in Disney Plus, and become a growth stock. And at that time, Netflix was trading at something in the order of 50 times its forward earnings. Disney was way down, around 20 times its forward earnings. Disney did this. It pivoted. It invested in Disney Plus, cut down, wasn't as profitable for a good time. The share price benefited, and the price to earnings ratio massively benefited too. It shot up, went to 70, 80 times forward earnings at one stage. Since then, as people have come out of the pandemic, don't have as much time to watch content online, the price to earnings ratios have come down for those companies too. They're now about 20 times forward earnings, which is exactly where Disney started sort of 3 years ago. Okay. So at this stage, it has to retrench a little bit and go, well, it doesn't have to, but the decision it's making is to retrench a little bit, cut back on Disney Plus, and unfortunately, therefore, it is also cutting a bunch of jobs.
Are other services like this, similar plays, making these kind of cuts? And also, what jumped out, of course, was the reports around cutting the metaverse component and whether other companies are re-looking at their metaverse investments.
Yeah, well, eventually, if you see this chart right now, you can see that comparison to Netflix, where you can see that Netflix is the blue line. It was trading higher than Disney on a price to earnings ratio. Disney overtook, and now they've come into line. Yes, Disney is cutting jobs in a similar way to the way Facebook is. Facebook massively expanded over the past few years, of course, rebranded itself as Meta. People are starting to realize that maybe that metaverse play is a good few years out. Meta did two things in its most recent sets of earnings. It cut a lot of jobs. It also stopped talking about the metaverse. And its shares are up 70-odd% partially as a consequence of that.
Okay, there's a lesson there, isn't there? Alex Webb, of course, running us through the implications of those job cuts at Disney. Thank you very much indeed. That is it for the European Market Open. Surveillance Early Edition is up next. You're seeing modest gains of 0.4% across European equities. This is Bloomberg.
solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. European indices follow global equities higher amid easing concerns of bank failure contagion. BOE Governor Andrew Bailey boosts market sentiment, hinting rate hikes may be coming to an end. We're going to be hearing live testimony from Bailey later this hour over the collapse of SVB and the central bank's response. Plus, a U.S. regulator accuses Binance of sham compliance measures in a federal lawsuit that claims its CEO routinely broke the rules. Bitcoin slides. That rally continuing in both European equities and E-mini futures. You are looking at barely change for the S&P. That's better than what tech is doing. Tech futures are falling in the NASDAQ this morning. Some reversal of tech as a haven trade. Perhaps you don't need havens if some of the banking damage is contained. Small caps in the U.S., those are also outperforming. The selling in the German two-year continues. Yields pushing higher by about 8.5 basis points. It kicked off yesterday not just because of those easing fears of the bank contagion, but also a report that Isabel Schnabel explicitly wanted in last month's rate decision for there to be language that more hikes might be appropriate. So the most hawkish member continues to voice the most hawkish opinions. So that also means the yield differential, euro doing better than the dollar this morning, as is sterling. Cable, that's up 0.2% at 123.13, despite the fact we had Andrew Bailey yesterday saying that they wouldn't go back to pre-Great Financial Crisis rates, hinting that perhaps we're near our end. Even so, we're getting a bid to sterling. NYMEX crude, that's higher again after a monster rally today, some 5% after a closure or some troubles at a Turkish port. What's leading the market today? Most of these regional indexes are in the green. The biggest gainer is energy, it's raw materials, it's those very economically sensitive sectors. Even banks are one of the best performing sectors. It's a near inverse of what the market has done over the past 2 weeks. Again, it lends its hand to this idea that at least for today and yesterday, we're less concerned about these banking issues. But speaking of which, in a congressional hearing today, the Treasury's top domestic policy official is expected to pledge that regulators will take all necessary action that Americans' deposits will be safe. For more on this, let's bring in Bloomberg's Valerie Teitel. Val, I know that this was a really big sticking point for markets. People wanted assurance that their deposits are safe, and we had these prepared remarks. So did we get that assurance?
Yeah, so from the Treasury Undersecretary for Domestic Finance, Nellie Lang, she did release those remarks that she prepares to give the Senate today. And she did hint that she is emphasizing how important regional banks are to the U.S. economy. She's possibly going to try to restore some comments after the miscommunication missteps from Yellen last week around uninsured deposits. We also hear from Fed Vice Chair for Supervision, Michael Barr. Now, in his pre-release text, he hinted at further expansion of regulation, talking about different stress tests they expect to put banks under, maybe perhaps a change in the liquidity rules when it comes to smaller U.S. banks. And lastly, we hear from the FDIC chairman. They announced that they are launching a probe into Silicon Valley Bank's management. And they also revealed that the 10 largest deposit accounts at SVB held over $13 billion.
Valerie, it's another day in the markets, a second day of stocks higher, yields higher too. Is this the market assuming the bank wobbles are over?
It's definitely been a week of optimism so far. The intraday swing in the 2-year yield in the last 2 sessions was nearly 45 basis points, climbing 45 basis points on optimism that these banking wobbles could be over and the Fed could hike rates in May. We're actually now pricing even odds for that Fed rate hike on May 3rd. But there is a lot of those maybe rolling their eyes at the recent optimism. Jeffrey Gundlach, in an interview with CNBC yesterday, stated that he expects the Fed to still cut rates at the later half of this year and expects a contraction of growth. Now, I've got another BTV which shows just how heavily discounted regional bank stocks and just bank stocks as a whole in the U.S., how heavily discounted they're still trading. It goes to show that we might be set up for quite a brutal bear market rally.
Can I just say, Gundlach also tweeted that opinion, and in it he said, but I'm wrong 30% of the time, so keep that in mind too. Valerie, thank you so much. Bloomberg's Valerie Teitel. Joining us now for our markets conversation this morning is Hugh Gimbert, global market strategist at JP Morgan Asset Management, and Bloomberg's Christine Aquino. Thank you both so much for joining this morning. Christine, can you just set up this debate that's unfolding? Because markets have backed off some of the rate cut bets, not totally, but different investment houses are now acting against each other in terms of whether they believe cuts are coming or not.
Absolutely, Danny. And that is the big question, right? Is that are the banking wobbles over enough that we can refocus back on inflation and really do away with those rate cut bets? I mean, that's certainly the view of BlackRock. And just sticking with what we've seen in terms of the messaging from Fed, other central banks as well, that inflation remains the priority. But then Gundlach, of course, on the other hand, insisting that no, a recession is coming and the Fed needs to cut, very much stemming from the recent turmoil that we've seen. And I think what's really causing a lot of the debate is just the idea of, you know, the fact that there is this longer term strategy to tackle inflation and really get that under control by central banks, and that's all well and good. But then when things like short-term stresses in the banking sector rear its head, you really get to see just how fragile the global market economic system is. You know, you have a lot of kind of powder kegs just waiting to explode at the moment, and it really is not going to take much. And this is why we've seen, I think, a lot of jitters around this banking sector, because people are thinking maybe this is the straw that breaks the camel's back.
Hugh, where do you stand on this? Is the market right to price in cuts for this year?
I think the market's right to price a Fed pause, because you go back a few weeks, there were good reasons, even before any of the banking stress that we've seen, for the Fed to be thinking that it was starting to break the back of inflation. The bulk of the inflation that's left in the US is in the most lagging parts of the basket, right? It's shelter, it's services. We know these things are going to take some time, so I think there's a clear case now for the Fed to hit pause. The question then in the second half of the year is how big the feed through from a deterioration in lending standards is to really get inflation lower towards target. And I'm not convinced we're going to see that quickly. So when I look at the market pricing significant cuts for the second half, I think really you'd need a pretty significant economic shock to get there. I'm more in the camp that it's higher for longer and the Fed hits pause, but then rate cuts are more of a 2024 story.
The corporate story also seems to feed into this, Hugh, because companies are still hiking prices and they're being rewarded for doing so. Shareholders prefer they have higher prices versus higher sales volume. To me, that seems like very sticky inflation. Can the Fed really afford pause even.
So I think they can, because when you see the progress that we've been making over the course of this year, you've had the energy price move come down, you've had now a clear deterioration in goods prices as well, and we know that over time, shelter, for example, when you look at some of the more forward-looking indicators on rental data, that's just going to take some time. There's no real benefit for the Fed to keep chasing this with higher and higher rates, because if they do, you're going to get a much bigger economic shock at the end of it.
And Christine, the recession bets, they are starting to unfold. We're seeing, I know this was a debate end of last year before all of this started to happen, but it's coming back, this conversation of if we're heading in towards a recession, what suffers, what does well.
Absolutely, Danny. I mean, it is quite a far cry from the no landing scenario that was being floated around at the start of this year, right? But yeah, I think recession bets very much coming back to the fore. And of course, a lot of investment houses trying to position for that. We've seen kind of bets in junk bonds, for instance. I mean, the argument there, I think, is that yes, this sector will suffer during a recessionary period, but it's also probably going to be the first ones out of the gate to rally once we get past that. That's quite a long way, though. I think, you know, it's a sort of trade that you have to be ready to make and sit on losses for a little while before it starts paying off, but certainly people are thinking about this.
Yeah, well, you know who is thinking about that? Your colleague Coleman over in the U.S. at JP Morgan Asset Management. But to the point of junk bonds, if you look at spreads at this moment, they're still under 500 basis points. Junk bond spreads about 60 basis points wider since March 10th, but that move is really dictated by treasuries. Are you surprised that spreads didn't widen more in this episode?
So corporate fundamentals are still pretty solid, right? We've seen a significant improvement in net leverage ratios. We've seen maturity walls pushed out to 25, 26. So I think there's a good reason to explain why we don't need to see the same kind of recessionary levels that you'd expect from high yield this time round. Right? I don't think we're going to get back to 800 to 1,000 basis points over this time. But still, as you say, with spreads under 500 basis points, I don't think that's offering compelling value here. So the high yield call for me is probably one that's more the second half of this year, looking at something around 600 to 700 basis points. So below sort of typical recessionary levels, but significantly above where we are. That for me is where high yield starts to get a lot more interesting.
How do you think about this equity market, Hugh? I love what you put in your notes, that equities are rallying on this idea of cuts, but the rally overlooks why rate cuts would come. Are we just whistling past the graveyard right now?
So my fear at the moment is that investors are almost dusting off the playbook of the last 10 years, which is rate cuts are coming, therefore go and buy growth, equities rally. But we are in a very different environment today. We're not in the period that we've seen before where rate cuts are coming because inflation's too low and central banks are trying to get growth going. Rate cuts are being priced because there's a significant risk of an economic shock. And so that, for me, makes me a little bit more nervous about the strength that we're seeing in equities at the moment. And I think it's much more important to be focused on more defensive exposures within the equity market. The nice thing now is that there are plenty of options to do that. So this time last year, you were trying to find some of those lower beta sectors, places like utilities or staples, but they were looking very expensive. Now you've seen valuations come off. And so I think it's all about quality within equities. This is really the kind of boring metrics like resilient earnings, like dividend payers that have been out of fashion for a long time. I think there's really good opportunity to be found there now.
Hey, considering the whiplash in this market, I am all for a boring investment strategy at this point. Hugh, Christine, thank you both so much for joining this morning. That's Hugh Gimberg, Global Market Strategist at JP Morgan Asset Management, and our very own Christine Aquino. Coming up on the program, the U.S. regulators have taken its most forceful step yet to crack down on crypto exchange Binance. I have those details for you next on Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. U.S. regulators have accused Binance and its CEO of routinely breaking derivatives rules, an allegation which the chief executive has called, quote, unexpected and disappointing. Joining us now is Bloomberg senior crypto editor Anna Herrera. Anna, what exactly are U.S. regulators alleging here?
Basically, the thrust of it is that Binance allowed U.S. customers on its global platform, which you're not allowed to unless you register. So that's the main point of the lawsuit. But the lawsuit was quite long and contained various allegations around lack of KYC, so know your customer rules, controls, which is important, right? Because that's the way you know where your customers are coming from. And then obviously it said that for years they let U.S. customers join on the platform, which again you're not really allowed to, and that's a pretty big deal.
Certainly, and we're also in this point right now where the previous big name in crypto was FTX. That of course is not anymore. So here you have Binance coming in, CZ as sort of the next big player. So what does it mean for sentiment if the next big fish is now coming under scrutiny?
So surprisingly, sentiment was hit yesterday, but is now somewhat recovered. It wasn't as big of a blow as you would imagine on prices. I think in a way, people have been saying it was like an open secret that you were allowed to trade. And if you think about it, the allegations sort of include long lists of like big trading firms, examples of big trading firms. They don't mention them by name trading on the platform. So if those trading firms were on the platform and were in the US, then you'd expect people to know. And so, there wasn't that much of an impact, but obviously, this is a serious lawsuit. And so maybe going forward, there might be more impact on prices or on the platform itself, on trading volumes on it, and where do people go and trade if they don't trade on Binance.
Okay, so story still ongoing. Anna, thank you very much for joining us. That's Anna Herrera, Bloomberg senior crypto editor. Now let's get to your first word news. With that is Leanne Gerrans. Hi, Leanne.
Hi, Danny. Police in the US say the suspect in a Nashville school shooting had drawn a detailed map of the building before killing 6 people, including 3 9-year-old children. Police shot dead the attacker, who they have named as a 28-year-old former student. Following the tragedy, President Joe Biden again called on Congress to ban assault weapons, saying gun violence is ripping at the soul of the nation. Now, the US Federal Deposit Insurance Corporation has launched investigations into the conduct of managers at SVB and Signature Bank to determine what led to their collapse. The FDIC chairman told a Senate committee that directors, officers, and other parties will now be held accountable. And the chairman of Barclays has described recent allegations against former CEO Jez Staley over his relationship with Jeffrey Epstein as, quote, serious and new. It's the lender's first update on the matter since Staley left the bank in November 2021. 1. Staley quit as Barclays boss after UK regulators found he had underplayed his relationship with the convicted sex offender. Staley is challenging those findings. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Danny.
Leanne, thank you very much. Coming up, controversial plans for judicial reform have been delayed in Israel. More on that next. This is Bloomberg.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup.
This is a 3. As the economic picture does. The OK is getting ready to make a decision.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. UK bonds selling off across the curve, yields pushing higher by as much as 10 basis points in the 10-year. We're going to hear testimony from BOE Governor Andrew Bailey in just about 20 minutes' time. Now let's turn to Israel, where Benjamin Netanyahu has delayed his controversial judicial reforms to prevent the country from being, quote, torn to shreds. It comes after tens of thousands of demonstrators took to the streets last night. Bloomberg Israel Bureau Chief and Senior Middle East Editor Ethan Broner joins us now. Ethan, what's the mood like in the country after this announcement?
Well, I'd say it's a mixture of relief and exhaustion and anticipation about where this will go. It's right now the parties that are involved are forming little negotiation committees. They're eventually going to go to the president's house and try to pick up to sort of figure out how to move forward on this judicial question. I think the problem, though, remains that in some fashion it's been kicked down the road. It seems much less likely that a radical set of proposals will pass or be accepted, but the question is how moderate will they be and how much of a difference that will make, and whether a kind of political force of the secular left has been awakened that will, in fact, make a big difference in coming months. It might be.
So does that mean we might not see that big of a compromise when these discussions take place over the reforms?
Well, I think we will see a big compromise, but I don't know how big. And there's a question of how to choose judges. There's a question of whether the Knesset, the parliament, could overturn a decision by the Supreme Court. These are the things that are, I think, going to be on the table right now. But I think the key is going to be whether the two sides can agree that this is all they're going to focus on, or whether there are going to be other things there. Don't forget, he fired his defense minister a couple of nights ago, and so we have to see whether he will get reinstated, and if he's not, what impact that will have. So I think it's an important and a very complicated moment for Netanyahu, who's been a bit of a magician politically in this country for a long time, and maybe running out of rabbits to pull out of a hat, or maybe not.
Ethan, thank you very much. Rabbits and all. Bloomberg's Ethan Broner there. Now, French unions also have been striking nationwide again today over President Emmanuel Macron's plan to raise the minimum retirement age by 2 years to 64. That's happening over mounting concerns with violence between protesters and riot police. For more on this, let's get to Bloomberg's Caroline Conan, who's outside in Paris. Caroline, what are we expecting today when it comes to further protests?
It is possible that we're going to see some violence again on the sidelines of those protests. Unions are expecting to do better than the 1.1 million protesters that you had last Thursday for the last protest against the pension reform. But what the government and the police doesn't want to see is this, those so-called black blocs, those far-left groups who are usually causing the violence on the sidelines and clashing with the police. So there will be about 13,000 anti-riots and police officers around the country today, and 5,000 in Paris in order to contain these violence. As you can see, some shops, some banks, just like BNP Paribas behind me, has already barricaded their windows in order to avoid these windows being smashed during the protest. And you'll still see some disruptions in the transport sector. You have about half of regional trains cancelled today, and also in schools, in gas stations, about 15% of gas stations are missing at least one type of fuel. Finally, Danny, one improvement, though, is on the garbage front. There's been a lot of trucks and private companies actually making rounds around Paris, and the garbage piles have started to recede.
Caroline, thank you very much. Bloomberg's Caroline Conan there. It is worth noting, it's happened very slowly, but the spread between French yields and Germany have been expanding, perhaps pricing in some of that political uncertainty. Elsewhere, though, in Europe, it is a day of rallying, about 1/3% on the overall benchmark. Some of those more risky type sectors like energy are doing better this morning. But coming up, we're going to talk ECB. Isabel Schnabel pushing for more hawkish language. This is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
European indices follow global equities higher amid easing concerns of bank failure contagion. BOE Governor Andrew Bailey boosts market sentiment, hinting rate hikes may be coming to an end. We're going to be hearing live testimony from Bailey later this hour over the collapse of SVB and the central bank's response. Plus, a U.S. regulator accuses Binance of sham compliance measures in a federal lawsuit that claims its CEO routinely broke the rules. Bitcoin slides. Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. We do have a pre-market reading on some of the U.S. regional banks. First Republic, it gained some 12% yesterday, is up another 5.5%. PacWest, another regional bank, up nearly 1.7%. I should point out, though, First Republic, even though it gained 12% yesterday, is still down 80% from March 10th. So it has a whole lot of ground to make up for. Now, as investors navigate this turmoil, the banking turmoil, so do central bankers. ECB Executive Board member Isabel Schnabel is said to be pushing for explicit wording on future rate hikes in this month's decision statement. Joining us now is Melanie Baker, senior economist at Royal London Asset Management. I should say, as you might imagine, specifically what Schnabel is calling for is to saying that there are possibly more rate hikes to come. Bonds seem like they're being sold off on this, but I can't help but wonder if the fact that this wasn't included in the last statement, the fact that Christine Lagarde said it verbally, but the statement itself was a little bit less clear about that, does that not mean that the doves have a pretty strong hold at the ECB still?
I don't necessarily think so. I mean, it's not just Schnabel. If you look at the commentary we've seen from ECB members since the meeting, it has been relatively consistent. And we have heard from a couple of the doves, of course, but many of them, or those you consider more on the hawkish side. And generally, the messaging it's data dependent, but they keep returning to this message that if their central forecasts remain intact, they don't get knocked off course by all the financial volatility, tighter credit conditions, they have got more work to do. That seems a relatively consistent messaging from them, I think, since the meeting.
Is it fair to say that that turmoil is contained in Europe for now?
It's very hard to say. I kind of felt like that earlier last week, and then it didn't feel like that, and then so
changes every day, every minute.
I think it's too early, but I hope so.
So does that mean then that there's this potential for the ECB to be heading towards a policy mistake? That it becomes a repeat of 2008, and they need to cut soon thereafter?
I think there could be a policy mistake at this moment from all the central banks in either direction, right, which is part of the problem. I think that's why they're trying to be a bit more pragmatic and very data dependent, looking at the evidence as it comes in and watching those credit conditions and, really trying to take time to decide which is the right path. I think it's very difficult for central banks here.
Yeah, I just want to point out we are getting some Enria from the ECB speaking. saying that they shouldn't, Mueller first off said that they shouldn't fear bank woes spreading to the Eurozone, and Rhea is talking specifically about the CDS market, about scrutinizing it. But I want to go back to this idea of banking woes in Europe. We've talked a lot on this program about the idea that it would tighten credit conditions in the US, and that makes sense to me because these regional banks, of course, so important for lending in the American economy. How would that play out in Europe in terms of this episode tightening credit conditions?
I mean, not necessarily quite as directly, but I think once you get worries about banks and the banking system, and it feeds through as well, I think, into expectations around the economy, it feeds through into potentially into business confidence and things as well. It's a natural environment where you'd expect banks to maybe pull back a bit, be a bit more cautious on their lending. So it may be a more sort of generalized effect rather than associated with a couple of specific banks. But nevertheless, I think it's something that, you know, economists are watching out for.
How about in the UK, how fragile are we at this moment in terms of the BOE continuing to hike and something else breaking?
I think they probably will have to continue to hike. I think that's related to quite strong underlying domestic inflation pressures as I see them. At the moment, the banking system, it's, you know, the UK isn't the centre of attention on that side. But of course, again, I think from a central bank perspective, it's not really, when they think about monetary policy, it's not really about the financial instability as such. It's about, again, how it feeds through into credit conditions and the real economy, into sentiment, how it feeds through into bank lending practices. At the moment, I think we're still on track for further rate hikes in the Bank of England.
Can you talk to me about your outlook for inflation? Because that above 10% reading did catch a lot of people by surprise. What are those domestic factors that is keeping inflation so sticky here?
It's general behaviour by companies, how they're able and willing to pass on price increases, cost increases as they're coming through. I think that's partly related to inflation expectations, and then there's, of course, a wage element. So we are seeing quite strong wage growth still in the UK, particularly in the private sector, so that's feeding through as well. So in generally, when I'm looking at inflation, I'm separating things out, and in the UK, I'm particularly focused on, for example, services inflation, which just it's very strong, and it's not coming down on a sustainable basis.
Well, then there's that element of demand coming into it, too. If not only corporates are raising prices, but people are willing to pay it, does that not need to suggest, not that the BOE needs to keep going, but that they need to tighten a whole heck of a lot more?
Potentially. That's certainly a risk scenario. I'm not assuming that they're going to have to tighten a hell of a lot more, as you say, but I do think that the messaging could have been a little bit different. One thing they could do is to continually re-emphasize that they are very serious about hitting the inflation target and tighten up some of that messaging. The Bank of England have been quite quiet in periods compared to other central banks.
And well, we did hear from Andrew Bailey yesterday, but he had said that rates are not going to go back to their pre-crisis level. Is that problematic, though, the fact that he's ruling out what the ceiling could be already?
I don't think central banks will ever rule out anything. I know something about that strong, but I wouldn't be surprised if you see that kind of statement coming out from, you know, several central banks. They really don't want to get down to the point again where you're effectively at zero interest rates. And at the moment now they have quite a cushion, right, to cut rates. It sort of makes sense in that environment, but I doubt that they're really ruling anything out.
Well, I think it's more so pre-global financial crisis levels in that where they were before they started to cut rates. But then again, the argument often with the UK is that the economy is so sensitive to rate hikes, especially looking at mortgages in the tie to that. So isn't there just then mechanically a ceiling of how much the BOE can hike because it would snowball pretty quickly?
That's a really good question, and I don't think we have a great feel for that. I think one of the issues is clearly that the mortgage market has changed. Right, so people have this increased preference for 3 to 5 year mortgages, whereas, you know, several years ago, a decade ago, say, you'd be looking at more variable rates in the mix. So that sensitivity, I think, has changed. It makes life a little bit more difficult. I think these hikes that we have seen will feed through into the UK economy, but they may take a little bit longer than we've perhaps been used to.
One of the other things I've been thinking about a lot is the fact that energy prices have fallen. But that hasn't translated into lower inflation necessarily. Is there a risk that inflation actually becomes more entrenched? Because all of a sudden you look at your energy bill, it's lower, and you say, okay, that means I can go out to dinner. I can go spend more money. I can go buy that thing that I've been wanting to.
That's a really good question. I mean, I think we will see that real pull down from energy prices from Europe, for example. I think when we get the data towards the later this week, the European inflation data, you will have seen exactly that base effect, negative base effect, really coming through. But I think you're absolutely right. There is a risk there that financial volatility doesn't weigh down on credit conditions, and we go back into that situation where it's kind of good news is bad news. So demand data comes out strong, we have strong employment data, strong jobs data, and it just means the central banks are going to have to hike more.
All right, Melanie, really great speaking with you this morning. That's Melanie Baker, Senior Economist at Royal London Asset Management. Coming up, it's not quite a fairy tale for Disney. The world's largest entertainment company is cutting jobs this week. Its veteran CEO, Bob Iger, attempts to save the company billions. More on that next. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Walt Disney, the world's largest entertainment company, will begin its first of 3 rounds of job cuts this week. In a bid to save over $5 billion, 7,000 jobs are going to be cut. For more, let's get to Bloomberg Quick Take correspondent Alex Webb. Alex, what's the thinking here behind these job cuts?
The thing you need to think about is that early in the pandemic, back in 2020, Disney had an activist investor that came in and said, you need to be more like Netflix, become a growth stock, double down on Disney+. And if you look at what was happening with their price to earnings ratios at that stage, Disney was trading at about 20 times its forward earnings. Netflix was in the sort of 50-time range. Disney did that. It doubled down Disney+, scrapped the dividend. The price to earnings ratio went through the roof, went to 70 to 80 times forward earnings. Now, as people coming out of the pandemic didn't have as much time to spend on Disney+, that meant those price to earnings ratios came down again. So Disney's now at 20 times forward earnings again, exactly where it was in sort of 2019. You can see that in this chart right now. The price to earnings chart is on a screen somewhere, but not on your screen. Anyway. What we've seen then is that they're trying to correct that, cut their costs in order to try and resurrect the share price.
See, that's TV magic.
Here we go. We've got it finally. So you can see this here. Disney's the white line, Netflix is the blue line. Netflix, massive premium to Disney back in 2019, 2020. Disney changes policy in sort of March 2020. Share price goes through the roof. Then we see the gradual steady decline, and they're back to where they started.
This is so fascinating because it's not just Disney changing tack. It's almost them going from, we wanted to be a growth stock, but now we want to be a value stock.
Exactly, and it's a thing that a lot of actually tech companies as well are thinking about right now. Actually, is there much legs in being a growth stock when we've seen, you know, interest rates go through the climb significantly, if not go through the roof? And it is a question that therefore a lot of people are having to ask themselves.
Does that mean the metaverse no more? I mean, I know we had that Wall Street Journal report that Disney was just going to cut its metaverse unit. I was talking to you about this earlier. I didn't even know Disney had a metaverse unit.
Well, the metaverse was a very buzzy word that actually made investors, companies like to say, because it suggested to investors that they were forward-thinking, they were spinning into this big new technology. You know, Facebook rebranded itself as Meta. Notice in the past two earnings calls, Facebook has barely mentioned the word metaverse. It has also cut a whole bunch of jobs. Disney is following suit in that case as well.
What does that mean for the future of metaverse investments? Is it a metaverse winter, if I may call it that?
Well, this is always going to be a technology that is a good few years away. It's interesting seeing Mark Gurman's reporting over the past few days about Apple. Apple had a big meeting with their top 100 executives where they showed off internally what they're doing in augmented reality, virtual reality, headwear. They said to their employees that it's going to be about, in the near term at least, about as big as the Apple Watch. They should think about it in that trajectory. The early years of the Apple Watch wasn't very big at all. The Apple Watch also has not spun up a huge secondary market of people playing into that, right? So it's a useful lens through which to consider it.
Interesting. Alex, thank you very much. That's Bloomberg's Alex Webb, the latest on tech. Now, just about an hour and 43 minutes into this trading day, European equities are moving higher. So are U.S. futures, but only for the Dow and small cap. The main indice, E-mini futures, are flat to down. NASDAQ underperforming, tech down 0.25%. It's the unwind of the trade over the past 2 weeks where tech was the haven amid the turmoil. It still is up, though, on the month, still the best performing sector in American equity. Coming up, BOE Governor Andrew Bailey is set to be quizzed by the UK Parliament's Treasury Committee shortly. We're going to bring you that live as it happens. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
News breaks. No one covers the world like Bloomberg.
never seen anything like it. This was a decision that maybe was the best out of 3 very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. In just a moment, we're going to be going live to testimony from the Bank of England governor over the collapse of Silicon Valley Bank and its effect on the UK. But first, let's take a look at some of the other top stories this morning. Prices in UK stores reached record highs this month in a sign that the cost of living crisis is far from over. Annual grocery price inflation soared to 17.5%, according to data compiled by market research group Kantar. The CEO of HSBC's Australia unit has defended the lender's acquisition of Silicon Valley Bank's UK arm. Anthony Shaw said the deal made great sense and had nothing to do with pressure from regulators. HSBC paid £1 for the business earlier this month, shortly after the bank's collapse. BOE Governor Andrew Bailey says interest rates will probably remain below the highs seen before the financial crisis. It's his latest hint that the UK central bank may be near the ending to its rate hike cycle. He also said that rate decisions won't be affected by the global banking crisis. Now, despite that language from Bailey, despite Bailey saying that we won't go back to the high in rates, what are we getting? We are getting a sell-off in gilts. UK 10-year yield, that is up 9 basis points, a second day of selling. That rate differential, we're not seeing as big of a move in the U.S., means that sterling is heading higher. It's off the highs of the day, but still just below 1.23. Meanwhile, the FTSE 100, that is able to climb up some 0.3%. It is energy that is leading this equity market throughout Europe. Of course, we know a lot of the oil majors live in the FTSE 100, so that is aiding the gains we're seeing in the UK bond market. But still, the attention goes, I should say, to the bond market. It goes there because we continue to see a sell-off following the big rally we saw over the past 2 weeks. Now, in terms of that rally, it was dictated by the fact there was turmoil in the U.S. over banking that spilled over. It spilled over into what's happening in Europe. Now, we're going to shortly be hearing from the Bank of England Governor Andrew Bailey and other senior BOE officials. They're going to be set to give evidence to UK Parliament's Treasury Committee on the collapse and rescue of Silicon Valley Bank UK. Officials are also expected to be quizzed on distress seen in the wider banking sector, including the fallout of Credit Suisse. We're waiting for that testimony any moment now. But first, let's bring in Bloomberg's Tom Metcalf. Tom, this is the thing, in terms of spillover effect into the UK, it doesn't seem to be a massive one. SVB UK was bought pretty quickly by HSBC. So what might the concern then be for Andrew Bailey?
Yeah, I think it's going to be interesting to see how he characterizes what happened. I think you're right. I think from a regulatory point of view, they're probably quite happy with how it went, right? Like HSBC was seen as pretty much the ideal buyer. There was not much need for government support. There's very minor guarantees required. So that's really good news to the regulators and the government. That's what they wanted. But yeah, I think for me it will be interesting to hear, is there sort of any nuance here? Is Andrew Bailey suggesting, perhaps they should have let SVB UK fail, for example, on an outlier point, because we understand that the Treasury, separate to the Bank of England, were much more keener to kind of make sure there was a rescue in place to protect that tech environment. So be interested to see if there is any kind of gaps between the Treasury and the Bank of England.
Yeah, I was going to say, here's the man himself. We are expecting to hear him speaking shortly. If you want to watch it on your terminal, it's live go. As soon as he starts speaking, we'll bring that to you. So it might be a very nuanced point, he says. I got to say, if he says they should have let SVB fail UK, that will be very fascinating. I'm sure get a lot of headlines. In terms of UK banks, what has the language been in terms of their strength or fragility?
I think they've been relatively insulated. So I think, none of the UK banks are seen as being particularly undercapitalized. I think, the kind of this ring fencing regime they brought in after the last financial crisis has seemed to be sort of adding a lot of stability. So, relatively speaking, they're not kind of in their sort of targets of investors, as it were, yet. But you've still seen these shares massively drop. They're now coming up again after sort of last week's sort of volatility. So look, the sector is still under strain, and I suspect it will be kind of being, you know, the messaging will be like, we're watching very closely, but we're kind of comfortable with the arrangements we have currently.
Okay, well, let's listen in for a few moments here to this testimony from Andrew Bailey.
Since Bearings, actually, I'd say. I mean, Bearings, as you'll remember, you know, was a sort of Friday to Sunday thing, and this was pretty similar. So, yes, I mean, I would, if you don't mind, draw a distinction with Credit Suisse, which we might come on to, which is actually a much more drawn-out affair. But yes, it was a very fast passage to failure.
So you mentioned Credit Suisse, their governor, and obviously quite a few of banking stocks, regional banks in the US. We've heard in recent days pressure on the share price of Deutsche Bank and so on. You probably won't want to comment on areas outside the UK, but I just wondered whether you think today that these individual idiosyncratic events are now past and that things have settled down and this turmoil in the banking sector in March is behind us.
Well, we've sent you an assessment of the UK banking sector, and obviously we'd be very happy to discuss any points you want to discuss out of that. I think the US authorities are still dealing with, you know, some of the consequences of the issue in the regional banks that manifested itself in Silicon Valley Bank. I think Credit Suisse, I would say, well, obviously, as you say, come on to, happy to talk about that, is a rather institutional specific story about long-run issues in the institution. So my view, and my very strong view with the UK banking system, is that it is in a strong position, both capital and liquidity-wise. It is not showing signs of problems in that respect, and we tested, as you know, very extensively. I also think that what we saw at the tail end of last week, Friday in particular, when there were quite sharp market movements. You know, I think there are moves in markets to, if you like, test out firms. I would not want to say that those, in my estimation, are based on identified weaknesses more than testing out. I mean, there is quite a bit of testing out going on at the moment, I think.
And last September, obviously, there was the stress test of the liability-driven investing, which was way outside the parameters of any stress test that you had run. Sam, have any of these developments been outside the stress tests of the sorts of things that you model for?
Well, I'd make a distinction here between the capital treatment of interest rate risk, which was a relevant factor in the demise of the parent bank, Silicon Valley. We do capitalise that risk very thoroughly for UK banks, including, by the way, for Silicon Valley Bank UK. And you know, I'm entirely content that the stresses we've seen are inside the types of stresses that we apply for capital purposes. Where I think there might be more of a policy question, it's an international question in which we'll take a close interest, is around the calibration of the liquidity coverage ratio. So that's the sort of 1 month liquidity, if you like, the banks have to hold. And as Andrew
So speaking there is the head of the Prudential Regulatory Authority, Sam Woods, about the stress test done by the BOE. We heard just moments ago from BOE Governor Andrew Bailey. They're being questioned by Harriet Baldwin, the chair of the Treasury Select Committee. Really fascinating that Bailey talked about the moves in the markets being ones that test out firms, saying it's not a reflection of any weakness. Instead, just testing them out. So kind of hitting out at the vigilantes in this market. Also saying that it is his strong opinion that UK banks are in a strong position, both capital and liquidity-wise. They're not showing any signs of a problem. We're going to keep an eye on that testimony as BOE officials, Bailey, Woods, other testify at the UK Treasury hearing on rescuing Silicon Valley Bank UK. You can watch in and listen in at LiveGo on your Bloomberg terminal. This is Bloomberg.
Stress test for when you're looking at some of these rules.
yeah, I think that's right. I mean,
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The issue for us is persistence, is what happens thereafter, really, actually, and what the underlying level of core inflation is in the economy.
The economy is darkening, even if it doesn't lead to a crisis in the immediate term. It is signaling that monetary policy is getting tighter. Central banks are still hiking interest rates.
The bottom line is that we already had a slowdown coming because of the lagged effects of Fed hikes, and now we're adding onto that a banking crisis, and that, of course, increases the risks that the slowdown is going to be faster.
I don't think we're quite out of the woods yet.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Bank of England governor testifies on the impact of the Silicon Valley Bank collapse, saying UK banks are in a strong position. Later today, US lawmakers face off with the Fed, FDIC, and Treasury officials over the bank failures. Binance says it's disappointed with that lawsuit from US regulators. The cryptocurrency exchange and the CEO, Changpeng Zhao, are accused of routinely breaking derivatives rules. And Israel's Prime Minister Benjamin Netanyahu is delaying a controversial plan to overhaul the judicial system. Still, thousands of demonstrators opposed to the plan were back on the streets overnight. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, on both sides of the Atlantic, we look as if we're going to learn quite a bit today about the SVB collapse, about the saving of certain businesses or the putting together deals to buy certain businesses on both sides of the Atlantic. But in terms of markets, we're trying for a second day to rally back from Friday's losses.
Yeah, we're trying, and we could be helped actually a little bit by China. Just saw a headline cross that Alibaba is free to pursue IPOs as well as other corporate finance moves whenever it's ready. And that is really interesting, especially when you add to that the fact that Jack Ma reportedly showed up in China again yesterday for the first time in, a year, at least a year, many years. Take a look at what we got going on in terms of the markets right now. S&P futures, which are down, are coming back to unchanged. We did finish in the green yesterday, only slightly, but we had banks leading the way as technology lost some of the gains it had made. Back up over 4,000 on S&P futures, as if none of this banking turmoil really ever happened. The U.S. 10-year yield rising a bit, 4 basis points at 356, 357 right now. So not a lot of movement there. There was more movement. There's more movement at the beginning and the end of the curve in the 2s and the 30s, for example. But the 10s are moving a little bit. Investors letting go of that debt, which I guess is good news for risk assets, as you see S&P futures now turn green. NYMEX crude right now at up 57 cents, 73.38 a barrel. This after really big gains yesterday. I think we were at 4 or 5% on WTI. We were under $70 a barrel when we looked at this quote yesterday, and that was gaining at the time. So we've come a long way back on crude. So watch for sure the oil producers that are so strong. I'm sure we'll see that show up in the European trade today. And then Bitcoin. Right now it's down 27.59, but it's over $27,000. So it had come down a lot on the Binance news that we got yesterday. We're going to talk about that today, the CFTC suit and the other regulators that are looking at Binance, putting pressure on Bitcoin. But it's still, I think a lot of people would say, shockingly stable considering all of the turmoil around crypto. Take a look at what's going on in Asia. Of course, those markets are closed for the most part right now, and so they won't be moved by the Alibaba headlines. But you did have a finish higher on the MSCI Asia Pacific, about 0.6%. The Nikkei in Japan up about 0.1%, and the dollar weakening against the yen. So the Bloomberg Dollar Index more broadly is down, which seems to augur well for risk assets, right? But as the yen gets stronger, maybe there's a little bit of a safe haven bid there. And then finally, we saw the CSI 300 closing down about 1/3% at 39.99. But as I say, this is before the Alibaba headlines crossed. Anna, what do you see in Europe?
Yeah, well, we'll see whether that Alibaba story then, Matt, develops into something that is just about the business, significant as that is, or something broader about the extent to which technology is going to be regulated, clamped down on, or not in China. That would seem to be a really interesting dynamic there. Here in Europe, we are seeing some strength coming through on European equity markets as we try for another day to bounce back from those losses during Friday's session. We were down 1.5% on many of these continental European markets during Friday. Yesterday, we bounced back some way, and today we try and complete that picture, if you like, try and complete the picture. And some of it is being driven by the bank sector. But to Matt, your point about energy, it is certainly not all about banks. So let's have a look at where we are on the oil markets, because that is a crucial part of what we're seeing today. We saw oil prices rally by more than 5% at one point yesterday. So that was a substantial move on the WTI price. This is Brent crude, and just in today's session, we're adding another 0.6% there. So from the low 70s back up to $78 as the handle on Brent crude. There's some specifics around a Turkish pipeline. There's also the dynamic around Chinese demand versus US recession. How does that all play out? But for the moment, a little bit of strength returning to the energy market. And that is sending shares in that sector a lot higher. So we're up by 1.5% for the energy names here in Europe. We don't want to take our eyes off banks for too long. We'll get to some of the news flow surrounding the banking sector, some of that coming through here in the UK just in the last few minutes. We'll get to that in a moment, but in the meantime, here's where we are on the banking story. So still staging something of a rebound from the selling that we saw on Friday, up by 0.8% in today's session. And here we have an 11 basis point move on the UK 10-year gilt yield. And I put that in, but we could be talking about treasuries, we could be talking about European yields, because it seems as if there's some sort of concerted move higher, as if we are increasingly able to separate out the financial policy issues surrounding banking and monetary policy, and maybe returning to the idea, Matt, that, you know, there are going to be, in some cases, some hikes from here. But we are seeing then UK gilt yields on the rise.
All right, yeah, let's focus in on the banking story and the central bank story, because the governor of the Bank of England, Andrew Bailey, has been talking. We just saw him speaking for a little while. Let's go right now to Jenny Serrain, to talk about what we're hearing from Bailey and, you know, what we're going to hear later on. Of course, the Senate meets today to talk about bank safety, and the U.S. House of Congress meets tomorrow. So, Jenny, what do we hear from Andrew Bailey?
Yeah, he'll be speaking this morning. I think he's going on right now. And I think one of the big things we're really planning to hear from him is just the nature of this bank run that Silicon Valley Bank endured and how that changes things for regulators from here. In the past, you would have had folks having to line up outside of branches and wait for their physical cash. And that kind of put a lid on things and slowed things down, gave regulators time to respond, gave executives time to react. We didn't have that this time. With a few clicks of the button, these clients were out the door in minutes. And so I think that's one of the big things that I think we'll be hearing from and have heard from Bailey on this week.
Yeah, good morning to you, Jennifer. And we're hearing from the PRA, the prudential regulator here in the UK, Sam Woods, also at this Treasury Select Committee, and talking about that very fact. We've got to look back at SVB outflow rates for lessons. And yes, as you say, Bailey has reflected on the speed at which these things can happen when it's at the click of a button and the word spreads really quickly. Just not such a visual story as the lines we used to get outside the banking sector. So that's what's going on in the UK. We're currently hearing from these banking regulators and key figures around the bailout of SVB, or the action they took around SVB UK. Let me ask you about what to look ahead to later on today then. We've got a Senate hearing. What do we expect?
Yeah, so we're actually expecting to hear from 3 of the top U.S. banking regulators. So you've got the Treasury, the Fed, the FDIC all there. And I think they're trying to send a couple of different messages. The Treasury has said we are planning to emphasize that we want to ensure the safety of all American deposits. So they're really looking to kind of calm investors and depositors alike. The FDIC and the Fed have a bit of a different tact. They're planning to come after the executives behind these banks. I think we heard from Fed Vice Chairman Michael Barr already saying, this was a textbook case of mismanagement, and it looks like they're really going to be holding kind of the persons responsible and looking at the management of these banks.
All right, Jenny, thanks so much for that coverage. Obviously, a lot going on in terms of bank regulation. Let's get to another regulation story right now. Binance says a CFTC lawsuit against the crypto exchange and the CEO himself, CZ, is unexpected and disappointing. That's a direct quote. U.S. regulators allege that Binance and Zhao CZ routinely broke derivatives rules and should have registered with the agency years ago. Whether or not that's even possible wasn't discussed. Joining us now for more is Ana Herrera, Bloomberg senior crypto editor. Ana, it's a fascinating story because registering as a derivatives exchange is not exactly easy, and it's unlikely that the U.S. regulators would even let Binance do that. However, in the emails that we see shown in the complaint, they blatantly, it looks like, tried to get around regulations.
Yeah, they clearly knew. Part of it is that they knew that they had U.S. clients, and you're not supposed to. I mean, you can make the argument that we could have applied, but you wouldn't have given us a license. But in the absence of that, you're still not supposed to have U.S. clients. So part of the complaint also had a lot of detail about, the lack of KYC checks. And, obviously part of that is like, who are you letting on the platform? Part of it was U.S. customers, but we also saw instances in which it seemed that they had potentially people who might have been using the platform for allegedly money laundering, or people that weren't using it for legit reasons. So it's quite a significant sort of document, the lawsuit, right?
So a lack of know your customer regulations and not effective anti-money laundering policy, just 2 of the things they suggest that the CFTC suggests that have been happening at Binance. But the CFTC is not the only regulator looking at Binance right now.
No, we've also reported that the SEC has been looking at them, and the IRS as well. So obviously it's kind of like the full force of the U.S. authorities are looking at Binance, and Binance is the biggest crypto exchange by far. It's massive, We talked about FTX a lot after it collapsed, but Binance is much bigger. It accounts for like the majority of trading in crypto. So, it makes sense that U.S. authorities would look at it. And it's interesting because, as Matt, you were saying, can they actually go after them? Where are they based? Part of the complaint also said that they were kind of on purpose, sort of never basing themselves anywhere so that they couldn't sort of be chased. And obviously this is a lawsuit and these are allegations, and Binance have said that they sort of disagree.
Right, but of course U.S. regulators tend to reach around the world whether or not you think they should. Ana, thanks so much for joining us. Bloomberg's Ana Herrera. We'll have much more on Binance later today on our Bloomberg Crypto Special. Tune in at 1 p.m. New York time, 6 p.m. in London for that. And of course, this is a story that will continue on over the next weeks and months, if not years. So we'll keep following it for you, of course. Now, let's get to geopolitics. Benjamin Netanyahu has delayed his controversial judicial reforms to prevent the country from being, quote, torn to shreds. It comes after tens of thousands of demonstrators took to the streets Monday night. Bloomberg Israel bureau chief and senior Middle East editor Ethan Bronner joins us now in Tel Aviv. So, Ethan, really dramatic scenes from those protests. I'm not sure how the counter-protests turned out, but what's the mood like in the country now?
Well, I think that you're right. Very dramatic push by one side, the secular liberal forces, the business forces, that forced Netanyahu to back down, at least temporarily. But it does feel like a kind of victory for them. There are going to be negotiations led at the president's house now between the various sides to come up with a deal that everyone can live with. We'll see if that works. But what I think is clear is that the radical end of Netanyahu's government, who vowed that they would break the government up if this didn't happen now, were either bluffing or anyway defeated. And so that could affect going forward, too. It could be a more moderate thing going forward. We'll see.
Okay, we've seen the Israeli shekel on the move as a result of this story. Ethan, thanks very much. Bloomberg's Ethan Bronner in Tel Aviv. Let's get to the French protest, driven by very different stories, but interesting to see what's happening in Paris and beyond. French unions strike nationwide once again today over President Emmanuel Macron's plan to raise the minimum retirement age by 2 years to 64. That's amid mounting concern over violence between protesters and riot police. For more on this, we'll bring in Bloomberg's Caroline Conan, who is in Paris for us. Caroline, what do we expect on this? Well, what number day of protests are we on now?
It is the 10th day of general strike in France since the middle of January, since the beginning of the union's action against this pension reform. And unions are expected to beat the number of last week, when you had about 1.1 million protesters in the streets across the country. What the unions and what the police does not want to see again today is the violence that you had on the sidelines last week with protesters and these so-called black blocs, these far-left groups clashing with the police. So you're going to have about 13,000 police officers, anti-riots squads across the country, more than 5,000 in Paris, trying to contain this violence. As you can see behind me, some of the shops, some of the banks, like this BNP Paribas branch behind me, have already barricaded themselves ahead of the protest this afternoon. And we heard this morning from the unions, the CFDT, the moderate one, and also the more radical CGT unions, who have called for Emmanuel Macron to pause this reform and start a mediation process in order to stop all this, in order to stop this cycle, because it's become very bad for the image of France.
Caroline, thanks very much. Caroline Conan there, talking about the protests in Paris and around France in response to Emmanuel Macron's attempt to raise the retirement age, something that I think Western nations are all doing, but none seeing as much pushback as the French. We had breaking news this hour that Alibaba, a $220 billion Chinese business, is going to split into 6 units, and it's allowed to pursue corporate finance moves like IPOs whenever ready. Of course, Chinese authorities had clamped down. Jack Ma had disappeared, the founder and former CEO of Alibaba. Yesterday, it was reported that he reappeared in China. A lot going on in this story. If you look at the one-day GIP of this, it's quite dramatic. You just type GIP all into your Bloomberg terminal. But right now, we're looking at the shares jumping about 3.7% in the pre-market. So that's a story we're going to keep following. Some other stocks on the watch include the the parent company of Calvin Klein and Tommy Hilfiger, PVH Corp, on the rise today, more than 12% in the pre-market, issued a stronger than expected forecast for revenue growth and earnings per share for the current year. So that's an interesting fashion mover there. Also, Lyft gaining in the pre-market. It rose in the aftermarket yesterday because right after the close, it tapped David Richard to be its new chief executive officer. He'll replace co-founder Logan Green, and that sets the stage for a potential sale because Lyft has really struggled with competition against Uber. So investors like that. The share's up 4% in the pre-market. By the way, look for our interview with the incoming CEO later on today. That's one you don't want to miss. And then we're also seeing Walgreens Boots Alliance shares on the rise. That trades here in the U.S., even though it sounds, at least to my ears, like such a British business after that takeover. Walgreens Boots Alliance expected to report results in just about an hour and 45 minutes. They optimistic view is that they'll recapture share of the prescription drug market, and of course they're caught in the middle of a political storm on the Plan B abortion pill, but definitely watch for headlines coming out of WBA in just about 2 hours' time. And then on the downside, we have Albemarle Corp. It's the world's top lithium producer. You may not have heard about it, but it's based in Charlotte, North Carolina, and it's obviously a huge business, not only because of our cell phone batteries, but because of the batteries that are going to power the cars of really tomorrow, albeit some of them already today. It had a cash offer for an Australian developer, Liontown Resources, a $3.7 billion cash offer rejected. And as a result, those shares are down. Maybe investors fear it's going to have to offer more money. Anna?
Yeah, lots to watch in the pre-market then. Coming up on the program, Matt, we'll talk to Maria Weitman, who is a senior multi-asset strategist at State Street Global Markets. She doesn't sound as bullish on stocks as she has done in the past. Fade the rallies could be the mantra. We'll talk to her shortly. And an exclusive interview with the Ukraine energy minister, or Ukraine's energy minister, I should say. He sits down with Maria Tadeo in Brussels. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller, based here in New York. Anna Edwards out in London. I'm looking at a chart, Anna, that shows what the market expects in terms of the Fed's terminal rate by the end of the year. And if you see the green line here, this indicates that there's about a 65 to 66% chance of a hike coming up, and then the market expects cuts after that. Maybe 2 or 3 cuts priced in, at least according to what we see in terms of Fed funds futures. Joining us now is Bloomberg Markets reporter Justina Lee to walk us through, what we should really expect, because a lot of this is hedging and a lot of this is, financial structuring. But we've heard from a number of people, Jeff Gundlach, Goldman Sachs, BlackRock, with other opinions about what the Fed is going to do with the rates by the end of the year. Justina, what do we know?
Yeah, it's interesting because all those people you just mentioned have conflicting opinions at this point. And we're kind of seeing this play out in markets as well. I mean, yesterday there was a big jump in banking stocks and front-end bond yields. And now Fed fund futures are actually starting to price in, possibly a 25 basis point rate hike coming up when it actually wasn't, counting on that at all before that. And I think what's really happening here is investors are realizing collectively that maybe they freaked out a little bit too much last week. But I think generally the narrative has moved quite a lot since, Silicon Valley Bank collapse. I mean, now everyone's kind of talking about recession even more now, because it does look like if there is stress in the banking system, and there certainly is, then that does mean that lenders are going to tighten their standards, and that will have an impact on economic growth.
Justina, thanks very much for the update. Bloomberg's Justina Lee with the latest on what markets are pricing in from the Fed, and certainly we're seeing that in other geographies as well. Certainly yields on the rise a little this morning. And for more market analysis, check out MLIV Go. That's the Markets Live blog on the Bloomberg terminal. This is Bloomberg.
To the world of business. Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority.
No one can claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends, we're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back. This is Bloomberg Surveillance Early Edition. Coming up on the program, we will speak to Maria Waitman, Senior Multi-Asset Strategist at State Street Global Markets. After the banking crisis, after the banking crisis, was it a crisis? Certainly was a drama. Can we get back to thinking about inflation? We'll get to that conversation. How high will yields go in that context? This is Bloomberg.
To my anxiety levels, which are already through the roof, I want to talk about the social consequences of this, because it seems like an environment where inflation is high, growth is slowing, the Fed is explicitly trying to boost unemployment. Like, it seems like that is probably the worst environment for, your average person on the street. And it almost seems like the Fed's goals here, they're almost anti-American at this point, or like anti the American dream, right? Like housing more expensive,
crushing the housing market,
crushing demand, crushing the labor force. Like, what are going to be the social consequences of central banks, having to do this in order to put a cap on price increases?
They're going to be severe. We're already seeing, of course, a backlash against free market, backlash against trade and globalization, even a backlash against technology, a backlash against, laissez-faire policies, because there has been a massive increase in income and wealth inequality. This is leading to populism of the extreme right and or of extreme left in many countries across the world, and authoritarian regimes becoming more popular across the board. It's a repeat of the 30s, literally.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Bank of England governor testifies on the impact of the Silicon Valley Bank collapse, saying UK banks are in a strong position. Later today, US lawmakers face off with Fed, FDIC and Treasury officials over the bank failures. Binance says it's disappointed with that lawsuit from US regulators. The cryptocurrency exchange and the CEO, Changpeng Zhao, are accused of routinely breaking derivatives rules. And Israel's Prime Minister Benjamin Netanyahu is delaying a controversial plan to overhaul the judicial system. Still, thousands of demonstrators opposed to the plan were back on the streets overnight. I'm Anna Edwards in London with Matt Miller in New York. And Matt, it seems like a day that we're going to learn both in the UK and in the US a lot about the demise of SVB. So we're not exactly putting the bank story behind us, but markets trying to recover from it.
Yeah, well, markets seem to do a pretty good job of recovering from it yesterday, right? We had energy stocks rising in yesterday's trade, just followed by financials. So those were the top two gaining industry groups. And that's a real turnaround from what we've seen the last couple of weeks. We do see very little change on S&P futures right now. So we're stuck at a gain of 1/100th of 1%, but we were down a little bit earlier. So we got a little bit of positive impetus from that Alibaba headline that they will break into 6 units and be able to pursue an IPO when they're ready. But it doesn't seem to have moved the needle that much. On the other hand, investors are selling out of 10-year treasuries. So that's a good sign, right? Because they're not necessarily seeking the safety, the perceived safety of government debt. I think we can drop perceived, right? It's pretty safe. Your money's good in treasuries, at least if you're holding to maturity, right? If you're in that position. If you don't have the ability to do that, if you have to meet, for example, depositor withdrawals, you should really watch that kind of portfolio. And maybe regulators should have kept an eye on that as well. NYMEX crude up 42 cents a barrel, so a little bit more optimism for the global economy coming into the crude market. It was actually kind of weird to see it trading so far down. We were well under 70 yesterday. Brent had gone down to almost $70 a barrel, and I think it snapped back up to $77, $78 yesterday. So that will be good news for the global economic outlook, or at least that's what it signifies, and also good news, obviously, for the oil producers. So watch, for example, Oxy here, and then pretty much all of the big heavyweights on the FTSE. Bitcoin is down $65 to just under 27,000. This is understandable after the CFTC lawsuit against Binance. You saw the collapse of FTX and then wondered, why is Bitcoin rallying from 16,000 back up to 28 grand? Now, with Binance under threat, it's more understandable that there's some pressure, but still it seems fairly strong for that story. Take a look at some of the pre-market movers. I mentioned Alibaba, obviously a gigantic Chinese tech stock, but of course its primary listing is here in New York. So it's up 4.5% in the pre-market on those headlines that it's going to break into 6 units. Also, I guess on some optimism because Jack Ma reportedly showed up back in China again yesterday, and then it's allowed to pursue an IPO when it likes. We also see a gain in PVH Corp, which is the owner of Calvin Klein and Tommy Hilfiger. It's basically a fashion brand that issued a stronger than expected forecast for revenue growth and for earnings this year. Obviously, investors like that. The shares are up 12% in the pre-market, so watch it at the open. Watch Lyft as well. Gaining a little bit more now in the pre-market, 4.7%. They said they're going to have a new CEO, David Risher. We're going to have an interview with him later on today, so definitely stay tuned for that. He replaces the co-founder who has been the CEO up until now, Logan Green, and that sets the stage for the potential sale of the company as it struggles to compete with gigantic rival Uber. Then you got Walgreens Boots Alliance coming out with earnings in just about an hour and a half. The optimistic view is that they will recapture market share in the prescription drug market, but of course we'll know for sure at 7 a.m. New York time, which is, now it's again noon in London?
5 hours.
Yes, yes. Thank you very much. Anna,
we are back. We are back this week to the 5-hour gap. That's what we need to know. Situation back to normal, Matt. That we can make sense of. So what we're seeing in Europe, which I know is what you were about to ask me, we're seeing this. We're seeing gains, but not by much. We're up for another day here in Europe after the heavy selling during Friday's session. All of that was focused very much around the banking sector. So we've done some of the work in trying to recoup some of the losses of Friday. Here are the bank stocks. We don't want to take our eyes off them for too long, given that we are seeing these SVB hearings taking place in the UK and over in the United States. And I'm sure Matt, regulators will be keenly paying attention to the advice you just gave them a little earlier about things they need to watch. Here's the energy names. These are on the rise as a result of a much stronger oil price over the last couple of days. Modest gains today, but more than 5% higher on WTI in just yesterday's session. Yes, there's some idiosyncrasies surrounding supply of oil through Turkish pipelines and a Turkish port, but there are broader stories about Chinese demand returning. So that's the bank sector, that's the energy names, and this is the UK yield. We're up by 11 basis points, and in fact, Matt, we're seeing this across a number of geographies here in Europe and also in the US. A sense perhaps that investors maybe freaked out a little too much, to use the words that we heard from our colleague Justina Lee earlier on, in their reaction to the banking crisis. And now a realization once again that if we're through any banking crisis, then we're back to fighting inflation. And does that mean higher rates?
Yeah, let's talk about that, exactly that right now with Maria Faimana. She is State Street Global Markets Senior Multi-Asset Strategist. Maria, great to have you on the program. Thanks for joining us. You know, I confess to being pretty terrified when all of this bank stuff happened, SVB and then Credit Suisse. I felt a little bit better when the ECB showed at least that it can still raise rates 50 basis points, and then the Fed coming out with 25 basis points. Now, I think I've restored my calm. I'm much more zen-like, back to normal. Is all of this behind us?
Yes, hello. I mean, I share your sentiment that we can restore some calm, but not sure all is behind in a sense that we still have inflation problems. That has not gone away. I mean, if you remember, I mean, times 3 weeks ago when we didn't hear about banking crisis, if that's possible, we were worried about 50 basis point hike, and we had very strong data. And I know not many people been kind of on a data watch, but if you look at things like city economic surprises, the U.S. data has been coming even stronger than before. So this idea that we avoided banking crisis is true, but what we have, like Anna was saying, is that we're back to inflation fighting, and I think that that's really important. And what we'll have with PCE data is coming on Thursday. That really is a key number for us to watch. Well,
They're only, raising now in increments of 25. That seems minuscule compared to the 75 bips we were seeing. And it seems like they're almost done, right? So as the Fed gets near the end of this and they become very careful, concerned that they don't want to break anything else, should markets be ebullient? I mean, we're back to 4,000 on the S&P already.
Well, I was concerned about possibility of recession before banking crisis, because our kind of central story has been that inflation is still very sticky, labor market is still very strong. So even if Fed is close to kind of top of the hiking cycle, it's still very far away from cuts. So our expectation was that Fed will have to stay keep policy very tight for a long time. So that was kind of prior to banking crisis. Now we have this big shock, and Fed is concerned about kind of breaking something. So to me, the path to avoiding recession or soft landing is much more complicated. So it's either they've already broken something and we're going into recession, or they haven't and they will in the future, because inflation is still there. So to me, recession probability is very high and rising.
So now is it just a question of timing that recession, Maria, and working out which sectors you want to get exposure to at various stages of the US cycle?
Yeah, no, absolutely. And for us, the longer this idea still holds true, the longer we avoid recession, the deeper it's likely to be, because by that time more things will break. And so in terms of kind of equity market investments, it's really finding out those places where recession will maybe bite less. And in that sense, I mean, for me, for us, the key trade has been for some time is preference for growth over value, because recession is really going to stress value stocks, and the fact that they may be trading at low multiples is not going to provide any respite. It's about where we can see ability to withstand kind of slower economic growth.
And what about emerging markets, Maria? I mean, at a time when we have seen recently, of course, great tension in developed markets because of the banking sector, and you're looking for havens all over the place. Maybe that crisis period has passed, or maybe we're through the worst of it. But what about the emerging market space then? Is this a good time to look at alternatives?
Yeah, no, that's a really interesting point, because normally emerging markets is like very high beta, and you worry about if you're in a crisis, and emerging market is one of obvious places to avoid. I mean, right now, what we know is that investors, particularly in emerging market stocks, are still heavily underweight. We know they've been avoiding particularly Asian market for years and years. And I mean, last year we've been discussing whether China is at all investable, and now we have reopening. It might be not going as fast as people like, but we know that reopening is happening, and we know that investors are really underweight this region, and we can begin to think about kind of structural improvement there. So emerging markets, ironically, is a very interesting place to be.
Maria, you are typically, if not bullish, enthusiastic, high energy. You clearly love your job, right? It's so exciting. What gets you going in the morning now, especially if you expect stock markets to be choppy going forward? There's no clear direction. There's so much uncertainty. What's something that really gets you moved to go to work and do your job?
Well, not sure about waking up in the morning being excited about going to work, but in general, I think this year is not about absolute direction for stock market. I mean, we were quite skeptical, but in terms of where the opportunities, it's relative bets. I mean, I mentioned preference for growth over value. I mean, I've been a skeptic of banks, as you know, for a long time. Obviously, not predicting the crisis, but we're really concerned about the kind of long-term profitability of that. We'll avoid it. Instead, actually, I've been talking to my clients about tech stocks recently. I think that's an interesting space. I mean, obviously, it's long duration, and if rates are maybe not as going up as much as people fear, then that's good. But looking at earnings outlook, actually, it's really interesting. In U.S., tech stocks are the only sector that is seeing consensus earnings upgrades recently. So to me, that's exciting. So if maybe that sector can avoid like big earnings collapse and multiple and interest rates are not going too high, that's an interesting place to be. So maybe preference for tech over banks can continue. So that could be a good opportunity for people.
Okay, there you go, Matt. There's your answer. The reasons to get up in the morning. Maria Weitman, thank you very much for joining us. So State Street Global Markets with thoughts on tech and banking and much beyond. Coming up on this program, an exclusive interview with Ukraine's energy minister. He sits down with Maria Tadeo in Brussels next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From our studios in New York and San Francisco, our new hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller here in New York with Anna Edwards out in London. Let's get now, though, to Brussels, where Bloomberg's Maria Tadeo is sitting down for an exclusive interview with the energy minister of Ukraine. Maria?
Yes, Matt, good morning. And we're joined by Herman Halushenko. Thank you so much for being with us on Bloomberg. Sir, I know you are meeting with your European counterparts today, and you want to talk about energy. But before that, I want to ask you about the general picture, because we've had the Chinese leader going to Russia. Vladimir Putin made this announcement that he's going to maybe station tactical nuclear weapons in Belarus, and yet this phone call between China and Ukraine has not happened. Are you worried?
I would say, of course, that is another announcement about the nuclear weapon, and no matter whether tactical or not, But they now are really control the another very important nuclear assets, which is Zaporizhzhia nuclear station, and that is the biggest in Europe. And so I really worried about these things. I might say even more about than these threats to let's say to put this nuclear weapon in Belarus or wherever.
You worry more about the situation in Zaporizhzhia than, and just to explain to an international audience, this is a Ukrainian power station in Ukrainian territory, but it's occupied and now handled by Russian forces. There is fighting around it and there's shelling around it. The Atomic Agency says this is playing with fire. This is very serious. So what's going to happen next in the next few hours?
And that is right. I mean, and the situation, it's more than 1 year already under occupation, because it was occupied from the night from the 3rd to 4th of March last year. And of course, the situation is become worse and worse, and that is confirmed by AIA. By the way, yesterday, Rafael Grossi was in Ukraine. He had a meeting with the President Zelensky.
And he said it's almost nuclear blackmail, what's going on. Those are very strong words.
And that is real blackmail, because they control the station, because they operate the station in the wrong way. And we understand that even because of the shellings of the lines which connected station to Ukrainian energy system, because today Ukraine supply electricity for safety or maintenance of the station. And due to these shellings, the station was 6 times in blackout, 6 times. So it means that blackout of the station is only one step to Fukushima scenario.
And would you say Russia is willing to risk that scenario? Or is there a red line? They also understand this is dangerous for us too.
You know, there are Russian representatives on the station. There are guys from Rosatom who are on the station. So, of course, they know what they are doing. I mean, they know the risk. When they shell the lines, we could imagine that they do not know the risk. Of course, they know the risk. And that is, I must say, even more dangerous than all the threats that we would put nuclear weapons somewhere. So because it's today they already control the station, and that is 6 units. That is the biggest station in Europe.
And you're here obviously to talk with your European counterparts. Ukraine has made no secret you want to join the EU, and I want to talk about specifically energy, because we've seen this cut off from Russian gas, oil, but there's now LNG. Is that something in your conversations that you're trying to force member states of the EU to say, don't touch that, even on a voluntary basis, just don't do it?
Yeah, of course, we discussed the sanctions, and that is a very important issue.
You want that in the next package?
Yeah. Of course, we want LNG. We want to strengthen the sanctions, which already, for instance, when we are talking about the price caps on oil. So we have a lot of things to discuss. And what is also very important, following our discussion now, that is the sanction on nuclear. So I understand all difficulties. We understand everything, but we need to at least to start these sanctions against nuclear, because they are playing these games and there is no response. I mean, nothing.
And they seem to obviously use that at times to increase the pressure on Ukraine. I do want to ask you, however, you mentioned it yourself, the price cap on oil. Obviously, that was capped a few months ago. Where do you want to see it now? I know a number of countries say $30, $40. That's possibly...
I think 30, it's quite fair.
That's what you're pushing for?
So, of course, we will ask this.
And what countries in Europe would say yes?
So I think, of course, it's difficult discussion. I understand difficult discussion inside the European countries, and we see this discussion, of course, but we understand that the importance of sanctions, not because we have sanctions. So we need to have efficient sanctions. If we have sanctions which allowed Russians to earn money, so they spend this money to produce new weapon to kill more Ukrainians. And that is the obvious circle, so we should be fair. So our task is not to allow them to escape from sanctions.
And that's a whole talk about the circumvention of sanctions that the European Union says it wants to focus on. I have to ask you a question, which I understand is delicate, especially when you're Ukrainian. This is your country. Obviously, you're attached to it. But it's been a year now. We see that Russia's still not leaving. They give no indications that they want to leave. For Ukraine, this counteroffensive, for the time being, has not manifested. Do you fear potentially that you're losing some momentum here? Is that something that concerns you? And is that why you're here, to say do not forget about Ukraine?
I don't have this feeling. I mean that because
you feel just as supported as you were before.
Yeah, I feel support. I can tell you that. I mean, especially in the energy sector, because what is happening? I mean, from the 10th of October, they started everyday shelling our energy system. It was the beginning of the heating season. It was the incredible challenging for Ukraine, and we managed to withstood. And all this time, I feel the support from my colleagues, from the minister, from many countries, and that is really give us more strength to go ahead.
And I can say that I've seen that resilience firsthand when I was in Ukraine very recently. Thank you so much for being with us, sir. I know it's a busy day for you, so we appreciate your time on Bloomberg TV. And of course, that was Ukraine's Energy Minister, Herman Lukashenko. Thank you so much.
Maria, thank you very much. Maria Tadeo bringing us that important conversation around energy and Ukraine. Coming up on the programme, we'll run you through the major events that we need to watch out for in your trading day ahead. This is Bloomberg.
The best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Let's have a look at what is ahead for us today. At 8:30 a.m., we get U.S. wholesale inventories. Then at 10 a.m. Eastern Time, U.S. consumer confidence data will be due out. Bloomberg Intelligence predicts the March data will show a modest deterioration after being shaken by the banking sector turmoil. Also at 10 a.m., the Senate Banking Committee will hold the first of several hearings on the collapse of Silicon Valley Bank and Signature Bank. After the bell, it flows there'll be time for some earnings. Micron Technology is scheduled to report its second quarter results. Analysts expect the report to reflect ongoing weakness in the market for memory chips. Quite a lot going on today, Matt, even if we feel like we might be on the other side of the eye of the storm, at least, of that financial drama. Interesting that stocks losing their nerve a little bit, though, as we head into the latter part of the morning here in Europe. We're pretty flat, almost entirely flat on European stocks right now.
Yeah, and we're pretty flat in the U.S. as well. We have S&P futures right now down about 0.04%. I think it's fair to call that unchanged. Nonetheless, we're at a relatively strong level. 39.77 was the close yesterday after we gained about 0.2%. So considering what looked like catastrophic banking turmoil, you know, not only SVB and Signature, but also the demise of Credit Suisse and the forced sale of UBS, I feel like these markets have done relatively well. Out of the last 4 weeks, we're up 3 in 4. So not bad.
And we'll see what we learn about SVB and its demise in the United States later. We've learned a little bit about the UK perspective here. The Bank of England Governor Andrew Bailey saying this morning, global markets are testing quite a lot of the banking sector. And it's not fundamental weaknesses around specific banks that he thinks is happening here. Maybe he was talking more about the European story there, but maybe sort of perceived weaknesses and where the market is therefore testing the banks. But over to the US a little later. We'll be listening carefully to see what we learn about SVB there. That is it for early editions. Surveillance is still ahead. They'll be hearing from Katrina Dudley of Franklin Mutual, among other voices, of course. More on the markets shortly. This is Bloomberg.
What are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg.
bank scare accelerates everything we were expecting this year.
It is really still a bit unknown exactly how deep this is going to be.
Markets are obviously trading on fear and panic.
Because the bond market just repriced itself overnight, we think that risk for the equity market is elevated now.
The Fed really sees a recession coming. They're going to do something.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene from New York on radio, on television, worldwide. Thank you so much for joining us this morning. A calmer Monday, maybe a calmer Tuesday as well. What we can know, looking at the Bloomberg screen, something's changed.
Yeah, what we can see.
Lisa, 4%, 2% yield. I mean, is that like recovery, crisis over?
Well, here's the issue, right? If you start to say, okay, wait a second, crisis over, then you start to price out those rate cuts that people were talking about before, to your point, higher yields. And then are we back to square one? Are we talking about the same thing we were 3 weeks ago, 4 weeks ago, before what happened with Silicon Valley Bank?
And square one to me is data dependency. We had a guest yesterday saying today's confidence numbers are important. We've got some good guests, Katrina Dudley, coming up as well on the European mess. But the answer is, I think it's calmer, but we're beginning to count up the credits and the debits of the last 14 days soiree.
Well, Mohamed El-Erian had a column in Bloomberg Opinion today talking about how we shouldn't conflate the lack of some sort of meltdown in the financial sector, as it's all clear that basically there still is a slow-moving tightening cycle that's going to transpire from what we saw with respect to smaller-sized banks. And that, he said, is what we really need to be focused on.
It's not only that, but it's this idea, and I believe it was J.P. Morgan out with research saying that first quarter is as good as it gets for different markets, maybe for the American economy. And you just sort of wonder here, talk about consumer confidence, banking confidence, where that stands now or where it stands into April. I think it's a huge mystery.
Do you feel people lacking confidence to go on vacation, to go out to eat, to go stay in hotels? Is there that lack of... But that confusion is the difficulty that people have. They're saying, everyone's naysaying that the sky's going to fall, but you look around and it's sunny out. And so I guess now it's time to keep going with our previous investment thesis. And this is a tension underpinning a lot of the moves.
What we can do in the tension is look at the data. And also, Lisa, I guess you're going to get to this in your brief for the 14 speakers today or tomorrow or the next day, that we have, but the really new is the old. We're data dependent. I mean, we're right back to where data dependency comes into our market analysis and, dare I say, our financial banking system analysis as well.
It's a good point. Because last week, no one cared about the data other than bank stocks. No one cared about the data other than whether we saw another bank fail.
And now what? Now it's the American economy.
Now what? Is it exactly the same kind of data? I don't know. We'll see with PCE, but it's also the Senior Loan Bank Officer Survey, which we're going to get on May 8th. That's the key pinnacle moment, or the H8 forms that we get on Thursdays or Fridays from the Federal Reserve, I believe Fridays. These are the sort of data points that people are looking for evidence of tightening in the banking sector.
And the key data point is what inflation does here, and that includes for the banking system as well. Bloomberg surveillance warning here. We'll point it out. We're not going to turn this into an accounting exercise. But when you see the bank that took out SVB up 45% yesterday in the market, you got to go, what's going on with the credits and debits here? The Wall Street Journal with a great editorial outlining that this morning. Futures -3, Dow futures fractional. The VIX under 21. It is a constructive VIX off of the sort of unchanged Monday that we had 20.96. The statistic today, without question, that 4% two-year bond, 3.9981 for those keeping score. 10-year yield, 3.54%. Curve not giving me anything. Real yield. I thought that was interesting yesterday, how the assumption is there of a subsumed real yield across all durations. The inflation-adjusted yield calms down in this slowdown that we're supposed to have.
A lot of people have been talking about how the silver lining here, the soft landing, is the Fed cuts rates and you get basically an economy that keeps going. A lot of people can't get there. You're not alone. BlackRock's Whaley has been basically saying. Yeah, a lot of people. Well. Okay, when you talk about data dependency, here's the data that we're watching. First at 9 a.m., a latest reading on the housing price indexes, and this to me will be very interesting at a time when potentially if mortgage rates are coming down, if mortgage rates are coming down, what ends up happening to home price demand? Do you end up seeing people come back in, and you are seeing a plateau plateauing in an index that did crater after the incredible rise post-pandemic. At 10 a.m., not only do we get the consumer confidence data, but we also get that hearing, that banking hearing down in Washington, D.C. Fed Vice Chair for Supervision Michael Barr, FDIC Chair Martin Grunberg, and Treasury Undersecretary for Domestic Finance Nellie Liang, all testifying, expected to say banking system is strong, very problematic sort of management issues that came to the fore. I want to understand whether people are interested in policies or whether people think that too much was done, to your point about some of the measures that have been taken already. And today we do get some earnings, particularly in the consumer-facing sentiment, and this to me will be very interesting. Walgreens, Micron, Walgreens before market, Micron, Lululemon, I know your favorite, you're always in Lululemon, and Dave & Buster's, the classic discretionary spend for people with kids who need to get rid of them on a rainy day. But I am curious what we see with respect to profits, with respect to demand at some of these areas where people could easily cut them if they were really kind of hurting.
30-second segue here. I was in a Walgreens yesterday. As you know, I've been coughing on air. Bramo talked to her people talked to my people, and they said, get a COVID test. So I never go in a Walgreens. I was in a Walgreens yesterday. And what I noticed is this modern theft thing. Everything's locked down, including the COVID test. And I'm fine, I'm negative, but after I had a martini, then I had the COVID test, and it worked out great. But the bottom line is everything was locked down, Lisa.
Well, this has been a huge issue. I mean, honestly, there were times, especially in the immediate aftermath of the pandemic, where I saw people stealing things outright and coming in with bags and just emptying the shelves. And so they've locked everything up. And you wonder what kind of nod they give to that in some of these earnings.
Well, something that we witnessed here in New York yesterday, as we say good morning to you. On what I see here, one of the things we missed here is a data check on Europe. It was quite a 10 days for Europe, and we're thrilled to bring you this morning. Katrina Dudley, portfolio manager at Franklin Mutual Series, doesn't describe her true European portfolio expertise. Are you optimistic about Europe, Ms. Dudley?
I think that if we look at what happened last week, Europe actually was kind of contained until the end of last week from the banking crisis, which was really started in the United States. And I think that that was a positive. But towards the end of last week, we saw what was happening in the U.S. kind of move into the European markets, and we saw some downward pressure in those European banking stocks. As I look at Europe, I think, however, that the structural drivers that we've been talking about for now a couple of months continue to underpin that market. So we can just continue to be optimistic.
When we're optimistic, we have to mop up a Swiss banking regime. I thought over the weekend, particularly the FT had some nice articles showing the Swiss people rebelling against a Swiss bank bailout of Credit Suisse as well. Does that carry over in the financial section in Europe to where there's a huge tension between people, governments, and the banking industry?
I think there's been a lot of tension in the European banking industry already. I think that we need to understand that the way that the Eurozone is constructed is it's a series of countries, and each of those countries has a central bank that will support that in-country banking system. We saw that with Deutsche Bank. We've seen that support come out for Germany, for example. We've seen it, as you described, with Credit Suisse and with UBS and the Swiss National Bank stepping in as well. So you will see that on a country basis, and it's a real reflection of the fact that Europe is just a series of countries that have come together to create the Eurozone, but those nationalistic interests still exist.
There's a larger question here underpinning some of the banking stress. Are we at the end of rate hiking cycles that have been the fastest on record? Katrina, what's your view?
I think that the Fed is very data dependent, and they're also watching that PCE number that is coming out on Friday. I think that they'll be as glued to their Bloomberg screens as I am. They're going to be watching to see whether or not there is any easing in inflation pressures. If there is, I think that they can just take a pause in that rate hiking cycle. But I have heard a lot of people thinking that we are going to have rate cuts towards the end of this year. We're not in that camp that we're expecting the Fed to turn so quickly. We think that they're more likely to take a pause in terms of the rate hikes, and potentially, there's been a lot of quantitative tightening in the market, and we're starting to see some of that ease.
Katrina, if that's the case, how do you play it through a market that has priced in almost 100 basis points of rate cuts by the beginning of next year?
In terms of how we play it, we just think you need to take a step back. And I think that that's the benefit of being a long-term investor, that ability to take a step back and have a look. I think that we were very concerned that the banking crisis and the increase in rates would really impact those small and mid-sized companies. And we've talked in the past about the industrial sector, and we talk about the three legs to that investment thesis. We look at the legislation that's positive, and that's still in place. We look at some of those structural drivers, electrification, for example, IoT is another. But the third leg was that supplier base that needed financing in order to expand. And we've actually seen customers step into the place of the certainty that you normally get from the financial sector. So we're actually continuing to be very, very positive on the industrial sector demand because that third leg of the stool continues to be strong.
Katrina, I got 30 seconds left. I'm sorry for this. It deserves a much longer amount of time. Bernard Baruch once said, by straw hats and winter, I'm seeing images of Paris in revolt. I'm seeing talk about a collapse of the Fifth Republic, of Macron, maybe even a reformation of a new republic, a Sixth Republic. Can you go long France here, given all the turmoil?
I think that what you need to understand is what has happened in each of these markets. Look at their response to the energy crisis, because they stepped into the market to support that low-end consumer, and it's those consumers that are going to remember that, and that's where the popular pressure really comes, that populist pressure, which really looks at these markets fragmenting. I think that argument has gone out the window. We think that Europe stays together, and that is positive for all those markets in Europe.
Katrina, thank you for helping us start the show this morning. Katrina Dudley here with Franklin Mutual, of course, the perspective on Europe. Lisa, all day we're talking about bond volatility. Two reasons, folks. It's the number one thing out there, and also Bramo's expert at it. We'll do the move chart later in all that. When you look at bond volatility, what does Bramo look at? Seriously.
I look at the rate hiking or rate cutting expectations.
You do the parlor game.
I do the parlor game because
I
don't do it with respect to my prognostication. I do it with what's being priced into the market. It gives you a sense of the market pricing a Fed reaction function, which really is key right now to whether it's a hard landing, a less hard landing. How do we get to the end of this inflationary cycle?
Jim Bianco, if you're listening in early morning Chicago, would you just send me a note and translate what Bramo just said? I have no clue what she said there. We're going to look at this all through the morning. Bond volatility, this with a yield of a two-year yield back above 4%, 4.01%. It's a Tuesday, key economic data today, including consumer confidence. Futures at -3. Lisa Bramowitz, Tom Keenan,
Jonathan Farrow. He'll be back tomorrow.
That's what it is. He will be back tomorrow, rumor has it. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. In Nashville, Tennessee, police have identified the person who shot and killed 3 children and 3 adults at a Christian elementary school. Audrey Hale was described as a 28-year-old white Nashville resident who identified as transgender. She is believed to be a former student at the school. Hale was killed in a shootout with police. U.S. regulators are now investigating managers' conduct in the Silicon Valley Bank and Signature Bank failures. The Fed's vice chairman for supervision, Michael Barr, called Silicon Valley Bank's collapse a textbook case of mismanagement. Barr and FDIC chairman Marty Gruenberg testify before a Senate committee hearing today. In France, unions are holding another nationwide day of strikes to protest President Emmanuel Macron's unpopular pension reforms. Union leaders are calling on Macron to negotiate. Last Thursday, protests ended in chaos, with some hardcore demonstrators fighting with riot police. Another sign that the cost of living crisis in the UK isn't over. Inflation in British shops hit a record high this month, 8.9%. That's according to the British Retail Consortium. Food prices rose even more, up 15%. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The bond market is somewhat, dismissing the Fed's dot plot. Because the bond market just repriced itself overnight, we think that risk for the equity market is elevated now more than it's been for the last 6 or 12 months.
That is Mike Wilson there of Morgan Stanley, really sharp yesterday on the back and forth here, the emotion. And I'm going to give the levels right now, Lisa. I think it's important, not only in the tumult of the last 10 days, to say SPX 4,004, Dow 32,600, NASDAQ somewhat near 13,000. I can't believe I'm saying that, 12,770. And a VIX, it was 30-ish, 28-ish, 27-ish. It hasn't come into bull market levels, but 20.94 is a good tape over the last 15 days.
Basically, the idea here is people took a look at the banking crisis that didn't happen or that did happen and then seemed to subside. And they said, well, it'll cause the Fed to cut rates, but the economy is still doing well, so risk on.
Well, it's going to be risk on. We're going to have to see, and to me, it's a complete mystery. Maybe off of economic data, we get back to some data dependency here.
Well, and
in the next couple days.
One of the big questions is whether we have actually gotten past the banking crisis, and we're not going to be in Washington D.C. There are these hearings that have been going on, and today the Senate Banking Committee is going to be having a hearing with a number of different dignitaries and officials, including Michael Barr, who is the head of the supervision unit. Yeah, exactly. Yeah. Take a listen to what he said in some pre-released remarks, basically saying our banking system is safe and sound, but at the same time, the events of the last few weeks raise questions about evolving risks and what more can and should be done so that isolated banking problems do not undermine confidence in healthy banks and threaten the stability of the banking system as a whole. How much can they draw a distinction between these as specific events having to do with bad management versus some broader stress that will be borne out through less lending and potentially additional failures?
On the politics of our finance right now and the challenges with these beginning hearings, speeches, discussions, and studies in Washington of what actually happened in the last 10 days. Gregory Valliere joins us right now, our chief U.S. policy strategist at AGF Investments. Greg, you and I have seen this before. We've had 4 once-in-a-lifetime events since 2007, and there is going to be a stream of hearings, et cetera. Does today's hearing matter? And with that, which one does matter down the road?
I think this hearing matters a lot, Tom. There's got to be an explanation as to why the San Francisco Fed overlooked all of these flashing signals. I think there's going to be very tough questioning. I think that the credibility of the Fed, and I'm not being, this is not hyperbole, I think the credibility of the Fed is on the table today.
Why do you say that, Greg? What exactly are people going to be looking to understand to determine whether or not the Fed is the right body to have the authority of oversight and whether it's sufficient?
Yeah, I'm not sure, Lisa, they're the only body. I think there'll be others. Obviously, Michael Barr will be a key player. But again, I would just reiterate, there were flashing red signals that the San Francisco Bank, which had a very cozy relationship with the Silicon Valley Bank, just chose to ignore.
How much do you think, Greg, we're going to be talking about what more Congress can do to shore up confidence? And how much are we going to be talking about what they actually have done, why they did what they did, how quickly, and which agencies were in charge of it?
Well, everybody wants to make political points, and there'll be that today. I think that any sweeping reform is really unlikely. They can't agree on anything right now, including a budget deal. So the idea that they're going to come up with new regulations is unlikely. Let's see what the Barr study comes up with. I think it's due in mid-May. You know, that may be a game changer, but I don't see any big changes right away.
What's the consequences, Greg? You said that this is a really important set of hearings we've got today in the Senate and tomorrow in the House. What's the consequences if this really is a challenge to Fed credibility, as you say?
Well, if it is, it may metastasize and go over to the other big Fed problem, and that's how incredibly inconsistent the Fed has been on interest rates. I mean, monetary policy has not been smooth, and I think there's a lot of criticism to go around on that aspect as well.
Greg, within these hearings is going to be voluminous reports. What I like is the brevity of 3 paragraphs. It happened to be the Wall Street Journal editorial this morning that laid out the government cost and whatever your politics, it's a bailout, a bail-in, whatever, I don't care. But of the takeover of a bank, the bank shares went up 45% yesterday for Citizens on taking out a fancy technology bank where a latte in San Francisco costs $8 a cup, whatever. We all get the stereotype that's out there. In these hearings, when they describe how the government is financing the bailout of this elite bank, this marketing concept, tell us how GOP and Democrats are going to respond.
Well, I think the thing that we've got to look for is to restore some confidence. And as much as I like Janet Yellen, she had a terrible week last week. She confused people. I think to a certain extent, Jerome Powell has confused people as well. I'm not saying that these problems will go away instantly, but I think that their rhetoric has to inspire more confidence.
Greg, I've got to turn to the shooting. You've been following this for decades. You and I remember where it was a rare occurrence. It's not rare anymore. I've been there. I mean, I spent a lot of time in Nashville over the years. Yep. And there's nothing funny here or reality except what's comedy is the lack of response at the federal level of this nation as we devolve to states' rights. Is this ever going to change?
Probably not. And Tom, I wish I could tell you something more encouraging, but I don't see the votes. I mean, that's what I do a lot of the time, every day. I look at issues and say, who has the votes? And I look at the House with Kevin McCarthy, very conservative House. I don't see the votes to do anything more on gun control.
Where's the middle on this?
Probably someplace in the Senate. There are enough moderate senators who I think would go along. There might even be enough moderates on immigration. There are a lot of things that have to be addressed, but I think with this House, it's going to be very difficult.
Greg Valliere, thank you so much this morning of AGF Investments. And we need to be transparent here and suggest to you that Michael Bloomberg, founder of Bloomberg News and, of course, Bloomberg LP, has contributed to this. Mike has helped launch Everytown for Gun Safety. It advocates for universal background checks and other gun control measures. It won't go away, Lisa, will it?
No, and it's a tragedy every single time 6 individuals lost their lives in this shooting, and that is what we are waking up to at a time when a school has been completely devastated.
Our advantage of this, folks, usually sitting on the desk with us, is John Farrow, and you can see, you can feel the foreignness where Farrow from the United Kingdom just goes, what in God's name is this about? And you can see it worldwide as well, whether it's, the lack of guns in Japan or here, there, or everywhere, whatever. But you and I live it with John going, why is this? What is this that causes this?
There's a foreignness not only to Jonathan Farrow, but also to a lot of people in the United States. And there's a real divide right now between people who view this as something that is acceptable and people who view this as something that is really ridiculous. And there are 2 different camps that I think are pretty entrenched at this point. The idea that there are not enough votes to really come out against it highlights the diversion that you see in this particular nation.
I'll give you a personal anecdote on this. My father was a life member of the NRA back when it was a different organization. And he said to me many years before he died, he said, Tommy, I made a mistake. And, it's interesting to see those back and forth as well. We're going to continue to discover this story really front and center this evening on Balance of Powers. Joe Matthew, Amory Horton, they're really going to move delicately through another terrible tragedy in Nashville and, of course, the other issues that we see in Washington as well. It's a mixed market today that we greet on a Tuesday across this nation. Lisa and I are looking mostly at bond volatility here. Lisa, you mentioned earlier, you bring it right over to the Fed game and the parlor game. I don't even know when the next Fed meeting. I honestly don't know when it is. That's what happens when you go on a three-island tour.
What I'm also looking at is how credit markets are performing, whether they also are rallying in tandem with stocks. Yes, they are. And here's the issue, right? Something has to give. Either inflation needs to be more persistently higher for longer.
Well said.
Or there needs to be something more material that happens to bring down inflation in a way that it just hasn't come down yet.
The research zeitgeist of the last 24 hours is there's little evidence of quote unquote, quoting from the economist Lisa Abramowitz, inflation is not giving. That Fed meeting is May 3rd. Coming up to give us a holistic view of the foreign exchange market amid this banking moment, Jeremy Stretch of CIBC. On radio and television, this is Bloomberg Surveillance.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
News breaks. No one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of three very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
Bloomberg Surveillance. Good morning, everyone on radio and television across this nation. Lisa Abramowitz and Tom Keene, Jonathan Farrell on assignment. I believe he's on the Gulf Stream right now. Maybe we'll see him tomorrow or the next day as well. What we're doing now, we're looking at a data check. Bramos's time is only one number that matters 4.02%, an elevation of the 2-year yield sharply. And I'm going to dovetail this, Lisa, right now in the data check into the Bloomberg Financial Conditions Index, which showed a little bit of restriction yesterday, which all in all is a constructive sign of crisis over. Do you feel that way?
I think there's a lot of noise. I think people are looking for signals in basically mayhem right now. I just think that we don't have a sense of what the lag effects are of a banking crisis that's going to restrict lending in a way that we have not seen yet.
You see it with the dollar equivalency, or 102, make it 103 on DXY. The pairs that we're talking about, yen 131 has been stronger. Yen euro